Perfect, thank you. Agenda pack is always available via ModGov. If I invite anyone to speak, if you can clearly state who you are for the benefit of anyone listening, please use the microphones provided. If you are wishing to speak online, if you can raise your hand and we'll come to you as quickly as we can. Audio is recorded for this meeting and the meeting is being broadcast in the usual ways. Right, so I'll start the meeting with apologies for absence. So I've got a little list here. So our independent member, Lindy, is joining us online. Councillor Lee Baker has sent his apologies. Councillor Mike Caswell is attending online. I understand Mike says that his internet connection may drop at some point. And Councillor Andy Sully is unfortunately not very well, but he is online. Thank you. And Nicola Hicks is on holiday?
Yes.
Yes, perfect. Okay. So I'll move on to the minutes of the previous committee meeting from, where were we? 28th of March, which feels like a lifetime ago. Just a reminder to all members, item 13, the fraud prevention in Somerset Council. Item was discussed in closed session, so if you wish to refer to that, please can you let me know and we'll have to consider going back into closed session to discuss that. Okay, so any matters of accuracy from the minutes first of all? No. Everyone happy? Any matters arising from the minutes which aren't covered elsewhere on the agenda? Mandy, welcome, good morning.
There we are. Thank you. There was a matter arising that I've actually discussed with you regarding the confidential session. Hopefully we can carry on that correspondence and move that forward if we may. I won't.
Yeah, that's fine.
Is that okay?
Yeah.
You've got my reply.
Yes, you've got. We had a response from officers. I haven't seen your response to that response yet.
That's fine. Thank you.
Okay. But that's fine. We'll pick up that conversation. Sorry, we're speaking in cryptic language for everyone else. Simon?
My apologies. I forgot to give you Big Father House apologies for the meeting. My apologies for that.
So no, Habib did tell me he wasn't going to be here actually. So that's my bad as well. So any other matters arising from the minutes? No. Do we need a formal proposer and seconder for the minutes? Yeah, Simon proposed, Mandy seconded. All those in favour? Yeah, happy. Any abstentions? No. I should have formally welcomed Councillor Rosemary Woods to Audit Committee. So good morning, Rosemary, and welcome to Audit. It's lovely to have you aboard. We welcome your input and hopefully through the day, if there's anything that you want us to clarify, because there's lots of acronyms and whatnot through audit, then please just raise your hand and we'll sort that out for you.
Thank you for that. Just say I didn't indicate whether about the minutes being accurate because I think I left part the way through the meeting, although I was there at the start online.
That's fine, Rosemary. I understand that. Thank you. Okay. Right. So if we move on to item 3, which is declarations of interest. Usual, Rosemary.
I noticed that somebody had declared that they got county council pension, which I have as well. Also on item 12, I'd like to declare an interest, so I won't take part in it because I had some personal input to that. So I won't at this stage take part in item 12.
No, that's fine, Rosemary. I welcome your declarations. Any other declarations of interest? No. Perfect, thank you. Moving on to public question time. Not been notified of any public questions. Is that correct? Perfect. Right, so moving on to agenda item 5, which is the external audit findings report and conclusion for South Somerset. So I'll hand over to Barry Morris. Good morning, Barry.
Morning, Chair. Morning, councillors. So sorry that you don't have an updated audit findings report here today. The position is that we have been going through the accounts. We did say that we would need to represent them if there were material errors that we identified. We have identified material errors which are being processed through the accounts. Disappointingly, our audit work is still ongoing. The quality of evidence and the underlying quality of those accounts is just not sufficient for us to be able to conclude on our work. And indeed, we were discussing with officers whether a set of accounts should be presented to this committee. But when we undertook some high-level review, we still identified some errors and amendments that had not been processed. Therefore, we did not have confidence, nor did officers, that those accounts should be presented to this committee. Our audit work is ongoing. I'll let officers explain the position from their perspective. I'm not prepared to make a commitment at this time as to when the audit will be concluded, because it depends on appropriate resources being made available to provide the evidence that we require. But I can confirm it won't be in June. Happy to take any questions.
Well, thanks for your transparency there, Barry. So if I ask for a response from officers as to why we are where we are, if that's okay, Ben?
Yeah, good morning, Tess. I'm Ben Bryant, Head of Corporate Finance. So as Barry said, we're not presenting final accounts and also didn't want to bring a set of accounts asking for further delegated authority as we did last time. Just as Barry said, the quality of the statement of accounts that we had at the time for presenting it to this committee, we didn't have that assurance over. So the work that we need to do next is to do it right and bring it back in terms of a quality set of balanced set of statement of accounts. Grant Thornton clearly have been trying to manage this extended audit as well as other work. So Grant Thornton need to come off of this audit now and deliver some of the other work that they've got to do. That gives us the time during June for me to put together some more internal experience resource to work alongside the team that we've got at the moment, going back through some of those fundamental issues that keep occurring, predominantly around property valuations, depreciation, and accounting treatments on those, as well as then going through some of the final audit queries. Trying to commit to, by the end of June, hopefully when the auditors can re-engage at that type of time, that we then have done that pre-audit work by doing it ourselves, so that we actually give a more reasoned set of statements back to the auditors to go through, hopefully stopping some of that backwards and forwards, which is the stop-start state of the audit that we keep going through at the moment. The other parts of this is my focus on the 23-24 close down of accounts, and this is now having an impact on being able to close down the accounts for there. So also during June, I need to take a position of when do we take the South Somerset opening balances to load into Dynamics 365, our finance system, to enable us to then close down this year's set of accounts. And I've got meetings next week with various officers to say at which point in this set of statements do we take an assured position that we load in. Probably realistically going, we know audit findings are on top of there, but then we will then do prior period adjustments in the following year, but they in 23-24 accounts for that. But at least it will enable us to move forward to start to produce a set of statements for 23-24. And you've got some of the papers today on the approach to that. So I just wanted to recognise this isn't where we wanted to be or expected to be, and it is quite disappointing and frustrating both for us and for the auditors. But it's better that we do this in the right manner than try and rush something through, hence the decision not to present something today. I just sort of wanted to put on record as well, just that thanks to Barry and his team, particularly Beth and George. It's been quite a collaborative and ongoing process here, and they've been working really hard with us on that. So just make that comment as well. Happy to take any further questions.
Yeah, I'll open up to questions. I've got Mandate, and I think Simon wanted to come in.
Thank you. Firstly, thank you for the honesty. And for me, as I've voiced numerous times in audit committees, I'd rather they came right first time than be bouncing forward and back. So I know it's disappointing. I know many have worked hard, but there's just a couple of questions arising, if I may. So firstly, this is one set of accounts. we have managed to get through numerous sets of accounts. I know we wanted a clean sheet, so we're nearly there, tantalisingly close, I think we are. So my questions are, there are obviously some issues here when you talk about misstatements. So the first question is, will the member of staff or members of staff, will there be conversations taking place, i.e. to try and avoid those, those challenges moving forward? And secondly, in the event that you decide to put the opening balance forward, can that be amended in the event that something then comes forward because the accounts aren't closed?
I assume those questions are to Ben.
Yeah, so we're reliant on external resource production of this. One of the things that we're suffering for is the loss of staff and legacy knowledge from South Somerset going into this unitary. Part of what I was describing was that we have well-experienced staff still remaining in our accounting team, and that's the resource I'm now putting in place to work alongside that external resource. In the property, plant and equipment example, what was the original balance? What are the valuations? How have you processed them? What are the journals? What are the entries into the reserves and all that sort of stuff? That actually is where the auditors have started to unpick some of the way that we treated some of that in the rush to produce the statements, so that we have that assurance before we're giving that to the auditors. And therefore, I'm confident in the experience that we've got in the team moving forward. I think it's where we're at with that lack of knowledge and the way that we're processing things in terms of the resource we're using. Your second point in terms of we will have to put in a position which allows us to close, it means that we'll have to do something called a prior period adjustment. So we will then have a list of audit findings for things that we haven't then adjusted for in the position that we've brought forward, and we will have to disclose that and correct that as we produce the statements, even if they're not in our final closed down accounts as such. We will then have to process those entries after. We've almost got the benefit of time here in that we're not meeting the end of May deadline clearly for the 23-24. So then by the time we produce the statements for 23-24, we'll be able to process those and put those through the accounts as we get to the Barry, I saw you put your finger up there.
So Barry wants to come in, so I'll bring Barry in. I think, did you want to come in to ask a question, Simon? No, that's fine.
Thanks. Just to pick up on what Ben was saying there. So when he refers to a prior period adjustment, I think what we'll be able to do, Ben, is when we close the audit, we'll just make adjustments to the opening balance position if required. So because it will still be within the statement of accounts, and because we haven't given opinion on South Somerset District Council, there won't be a need to do a formal prior period adjustment. We'll be able to just wash that up in the closing statements for South Somerset District Council, and then the council can then make those amendments in the opening brought forward balances for Somerset Council. So it won't appear as a formal prior period adjustment as you might need, as you might think. But again, that's just a technical clarification.
Thanks, Barry. And so I had a couple of questions for you. So having been a veteran of more than one South Somerset audit, I still have the scars of the PPE verification. Are we had the conversation yet about the valuation of property, plant and equipment? Are we at a sort of valuation that everyone's comfortable with, or is that a whole can of worms that's yet to be opened for this year?
So, Chair, we are we've done a lot of work on the property, plant and valuations. Those are where our queries have arisen. So again, we have been challenging, as you would expect, back to the valuer to make sure that they process things correctly from a valuation perspective. I think one of the challenges that we've had is that also then the subsequent accounting treatment of those amendments or those valuation changes have not been processed correctly. So that's what Ben was saying, is they're having to go back and unpick, because we've identified that the way that some of the adjustments that have been put through and the valuation changes have been put through have not been processed correctly. So that's part of the challenge, and that's why one of the reasons we didn't have confidence in those accounts coming to the council today.
Perfect. So I suppose the sort of issues we're having here in terms of
the loss of organisational memory are likely to plague us in the future, particularly as we come to the first Somerset Council audit, which I know isn't the subject of today, but it's something that that we'll talk about when we come to the audit plan in a minute. But I do have some concerns that we need to get better at managing the transfer of people in and out of the organisation. Obviously, we're going to be losing quite a lot of organisational memory at some point, and we need to be able to manage these issues. The organisation still has to function regardless of the personnel. So I'm a little bit concerned that we need to sort of pick up some of these lessons and make sure that we're not repeating them ad infinitum. So that's one for the team probably to address when we come to the audit plan in a minute. So if there are no other questions on this item, I was going to propose moving on. Rosemary, did you want to ask a question?
Because where I've referenced things, I've got somewhat lost. You were talking about the value of properties. Yes. Now, how does that square if you're selling off properties with whether there's still a debt on those properties? Because we seem to be selling off properties without clearing any debts.
So this is about the valuation of the properties that we held at the end of the accounting period. So the end of 2023. Yeah. March 2023. So at that point, we hadn't sold off any particular property. So the question about how the council deals with the sale of its commercial properties isn't necessarily one for this particular audit. There's a wider question in terms of the probity and the best way of doing that. But in terms of what this audit's trying to achieve, it's trying to work out the value of the assets that the council held at the end of March 2023. Does that make sense?
I apologise for that.
No, that's all right. No, you don't have to apologise. It's there's no problem in you asking any question. You know, the only problem comes if I get the answer wrong. Then Barry puts his hand up and corrects me. So can we move on, or has anyone got any final questions on this audit? No. Okay, I think we need to note where we are. I think we would like regular updates. I suppose the final question is there any risk that we end up using the backstop when it comes to this? There's a lot of smirking going on here at this point.
So Chair, we are looking at every option that may be available to us in relation to this, and I think Plan B or C or D or wherever we're up to at the moment in the alphabet is still to get these accounts finalised and completed. It's a great question about the backstop. There has been an event that occurred recently which has put the backstop date to the 30th of September under significant doubt. We do expect there to be a backstop in the future, but it won't be the end of September. That said, I really don't want to be here talking about South Somerset District Council in September, but we may be.
Jason.
Yeah, obviously the dissolution of Parliament has thrown the backstop up into a bit of an issue nationally, should we say, as in the legislation hasn't been passed, which is a bit of a thing. But as Barry said, we are committed on both sides of the council and the auditors to get this one done. How shall I describe it? It's the troublesome child of the audit. This committee has done, you'll see in the later report, we've done 9 sets of accounts in the last year. This is the final one to get over the line. It's disappointing where we are, and we, both sides, are not happy about that, but we will get it right. It will take a couple of months to kind of get there and get that back to you, but I don't think we'll see it just drag on. I think we're both committed to get this done because it's really important for the opening balances for Somerset Council and how we rely on that and having that clean sweep across the board of all the audits done.
Okay, I'll move on. So moving on to item 6, which is the external auditor's indicative audit plan for Somerset Council for 23-24. Hello, Barry and Grace.
Thank you, Chair. So I'll hand over to Grace to take you through the detail, but just to confirm why the title says an indicative audit plan. The reason it says indicative is because we've undertaken a lot of our planning work, but some of that still remains outstanding. We think that we've identified all of the significant risks and other risk areas within the council, but by bringing it as an indicative plan, that enables us to come back and say if there's any further issues that we've identified as a result of finalising that planning work. It is a new council. It does introduce new risks for a whole number of reasons, and I'll let Grace take you through those.
Thank you, Barry. Yes, this is our audit plan for the 23-24 year. So this outlines our strategy and our significant risks for both the financial statements and the value for money work that we undertake. So as Barry said, this is indicative due to a number of planning items still being outstanding. An example of this is the group scoping. So we haven't been able to scope the group accounts yet. So we probably won't be able to do that until we receive the draft accounts based on the materiality levels and obviously the structure of the group, which is still being formalised. That's the same as well for the materiality level that we've set. So we've based this on the prior year accounts, just a total of all of the legacy councils, but obviously that is likely to change significantly once we receive the draft accounts. We will revisit that. The significant risks are outlined within the report. There are 7 significant risks on the financial statements. A number of these you'll be used to seeing in previous years and relate to the valuation of property that we've discussed, valuation of pension and management override of controls. There are, however, 2 specific risks for this audit due to the new council and the new system being implemented. These are outlined on page 8. So we have a risk around the accounting for local government reorganisation. So that's looking at the opening balance position and checking the accounting is appropriate, and then also reviewing the new system implementation of Microsoft Dynamics and the general ledger. The provisional timetable for the audit at the moment is receipt of the draft accounts by the end of September, and then they'll come in the first week of October. We are working closely with Jason and Ben on this, and obviously based on the things we've already discussed, so the South Somerset audit, loss of key staff, and obviously the new system, we are keeping in touch frequently and keeping track of that progress to see that we're still on track. In terms of the value for money work, this is obviously an evolving piece of work and something that we keep under review throughout the year. You may remember from our previous report that there were a number of key recommendations and significant weaknesses. So these will all be followed up as part of our 23-24 work as well. I wasn't proposing to go through any more of the detail, but happy to take any questions if there are any.
Okay, so to open up first to members, Mandy and then Gwyl. Okay, Gwyl, you can go first.
Thanks for that. Where's the bus? Right. Yeah, this is my first time on the committee as a formal member, so forgive me if I'm a little bit naive or asking questions that I should know better. But it occurs to me that the one that stood out was in relation to the management override of controls. Now, one of the things that struck me when the financial emergency was declared last autumn was that we introduced a system whereby all transactions had to be entered onto the system, and you had to place an order on the system and then it would go through, which I thought was a bit, for such a large public organisation, I thought that was strange. And we did our audit training the other day, and I did query this, and Alistair said that yes, we should have been a bit tighter on this. So I'm now moving on to one. I want to make sure that this audit plan will actually drill into that and make sure that all the people who are supposed to be entering payable orders onto the system do so properly. And I think there was a hint that actually anybody can do it rather than it going through an accounts department. Clearly, if you have an accounts department where people do this as their day job, then the chances of errors are much lower than if you ask every officer to enter all the details of an order. This is what we used to do in natural England. It was an absolute nightmare. You had to sort of work your way through a 20-page PowerPoint in order to place an order, and this was a responsibility of everybody, and everybody hated it. We should have had a much better system anyway. So, and that's where I think mistakes will be made. And this leads me into sort of page 44 and about unusual transactions. And I was querying it, and I've seen from the notes that an unusual transaction is non-routine, unusual due to their size or nature, and that therefore occur infrequently, so they will stick out. And I guess they're relatively easy to sort of look at. And then I started thinking about the Bulgarian case that's just gone to court, about how these people were able to siphon off millions of pounds from the DWP simply by setting up a recurring set within an existing system, hiding in plain sight, and nobody saw it. And I just wondered if we actually analysed not only the unusual transactions, which are the ones that are fairly obvious, but actually whether we notice what you might call what would turn out to be unusual activity in apparently day-to-day stuff. Sorry, there's a bit of a jumble there, but I hope you can catch my drift.
So I'm assuming that was directed to Barry.
Yes,
Yeah.
please. Yeah, I mean, it's part of the audit plan. I just wanted to check that my understanding of how things are working or proposed to work was correct, but also that the audit plan does cover those sort of risks.
Okay, so thank you, Councillor. So through the Chair, when we refer to management override of controls in terms of the audit plan, that's basically responding to the mandatory review that we need to take. So at all organisations, whether it be public sector or private sector, the international standards of auditing expect us to review the controls that are in place. So what that involves us doing is looking at the control environment, both the manual controls that are in place, as well as the automatic controls that are in place and the IT controls that are in place. And we use our IT audit specialists to review the IT environment to make sure that those controls are operating effectively. What we then do is we not sort of stress test, we look at the control environment, and then we look at where is there opportunities for management to override that control environment. So we assume, as you say, large organisation, there will be lots of controls in place, but we assume that management would always be trying to circumvent those controls to manipulate the financial reporting. We're auditors, we're suspicious, that's what we do. We trust no one. So that's why, and then we use all of the transactions we put into a process called inflow, and that analyses all of the transactions that are undertaken by the council. And then what we do is we look at a number of routines to identify. So we'll identify targeted tests. So a great example would be, has Jason processed any journals? Because we wouldn't expect him to, or have any other senior officers done it who we wouldn't normally expect to. Now, the reason we do that is because Jason would be in the position to manipulate the final outcome, because that's what he might want to do. We may also be in a position whereby we're looking at other unusual transactions. So are there lots of transactions of the same value with the same reference? So those will get picked up, and we would then investigate to say, well, actually, those look a little bit unusual. In the old days, we also used to look at journals processed at the weekends, but in the world of flexible working, that's not so much of a risk anymore, particularly for working on the South Somerset audit. So those are the sorts of things that we will be looking at. Now, as regards the particular control environment around purchase orders and making sure that people are putting in the purchase orders properly and following that process, we won't go into that level of detail. That may be something that internal audit would look at, but that's too low a level of detail for us to get to test those controls. So again, that may be something that colleagues in internal audit would do, but that wouldn't give us material assurance, because that's where we're focusing our testing at that higher level.
Thanks, Will. Mandy?
Thank you. Just a couple of questions, if I may. So if I look at page 58, which is our risks of significant value for money weaknesses, I'm just looking down the list on the right, the relevant legacy councils, and sort of understandably, there's nothing there for Mendip, because they used different auditors. So my question was, will those issues for Mendip appear in another paper somewhere? Because obviously you are our auditors now. How will that roll forward? And the same vein, if we look along, when looking at the general fund and earmark reserves, I'm just trying to understand why SCC is the only council there and why all of them wouldn't be there. My second question relates to page 59. And again, Ombudsman's investigations, why only Somerset County Council? I'm just trying to gauge on some of them, there's districts, and on some there's just county councils. So I'm just trying to work out why. And my last question was actually around the escalation policy on page 74. There's a detailed escalation policy there, which I printed out for future reference. And there is a lot of detail about what happens if items need escalating. But what I sort of haven't got a full sense of if the tables are turned and we need to escalate something as a council with an auditor. So you put a lot about our escalation process. I didn't see much about the reverse.
Okay, thank you. So coming to the value for money queries first. So those 2 pages, 58 and 59, are an extract of the auditor's annual report. And you'll remember when we presented that back in January, we spent quite a lot of time trying to identify which council it related to. So that's why some of the issues only relate to Somerset County Council, some of them relate to the District Council, and some of them relate to Somerset Council going forward. So what we will be doing as part of this year's value for money work is looking at the progress that has been made in addressing those issues as far as they impact upon Somerset Council in 23-24. In terms of the Mendip issues, Jason, can you remind me, has the annual auditor's report been issued by Ernst & Young?
So we've had the sign off the accounts, but I'm struggling to remember seeing the final report picking up the value for money stuff, actually. I think we've had a draft, but I don't think they've finalised it, actually. So that we need to get them to complete that.
Yeah. So any issues that they've identified, we will incorporate and consider as far as they impact around Somerset Council. Our value for money work on the council is due to commence in the next few weeks. So it should start within the latter part of June. And again, what we will be doing is focusing around the key risks that you're facing now. So what we're doing here is we're just reporting those issues that we've had previously. We will then do a detailed risk analysis and detailed planning for the 23-24 accounts for Somerset Council. As you would expect, Councillor, we've been in regular dialogue with Jason and colleagues around the emerging financial situation. So we have a lot of information already, and we've made a number of inquiries already and gathering evidence around the transformation plan and the baseline assessments and all that sort of thing to try and get that information. And I've had a conversation with my social care colleagues within the firm just to try and get them to come in and do some work as well, because obviously that's a critical area of challenge for the council in terms of the overspends on the budget. So we're bringing all that together to look at the value for money risks for the council, so that when we get to the end of this value for money programme, you will have an assessment of how the new council is performing and the areas where it needs to focus. In terms of the escalation policy at the end, you're right, it is very council focused. So one of the things that we're doing is really trying to highlight and address the fact that there are backstops in a number of organisations. Now, unlike the council and your district councils and the county council before, there are a number of councils that have not produced accounts for a number of years. And they consistently miss those statutory deadlines. So what we're doing is we're trying to bring out and trying to up the game and up the public reporting, saying, no, we expect you to comply with the statutory deadline. Now, Previously, with all the councils that formed Somerset Council, we haven't had an issue with that. Those accounts have been produced, at least on time, and that's enabled the audit to progress. Now, we know already that Jason and colleagues aren't going to produce the accounts for tomorrow. We've been discussing that for a number of months, so that deadline's missed. So in certain ways, we're not going to be deploying the escalation policy here in the way that it's sort of written, because we know that you're not planning to produce those accounts till the end of September. Should you get to the end of September, that's when we'll start to consider the escalation policy. Now, in terms of what happens about if you're not happy with the performance of the auditors, should an almost impossible event like that ever happen, then your main route is to go back through PSAA, and they have a complaints policy. So Grant Thornton has a complaints policy that you would follow to say, actually, we're not happy with the work that Barry and the team has undertaken. There is an independent partner that would undertake a review of that and see whether or not they upheld that complaint, and then would take action and remove me from the audit and do all sorts of nasty things. If they don't uphold that complaint, they would then communicate back to you, and then you have the right to go to PSAA, who are the contracting authority, and say, actually, we don't think the work is appropriate. PSAA will then consider it, and you also have the right to apply to the ICAW to say that you think our work is deficient, in which case the regulator would come along and have a look at our work.
Thank you. Just to respond, I think it's a shame really, because really to me escalation should come before you head down a complaints process. So I would hope that that would happen. And also the Ernst & Young, I do hope that doesn't drop off the edge, and I'm pleased to hear that if there are issues there that they will flow through. I suppose what we need to ensure is that that comes, the Ernst & Young end position comes to us in a timely manner to get it into this year's plan. Thank you, Chair.
Thanks, Mandy. Any other questions? No. If not, I just had one. It was actually on the escalation policy as well, Barry. So although we've got the formal steps set out here, I assume that you'd communicate with the chair and vice chair if you did have concerns at any point, because I think, like you, we don't like surprises. So once it gets to step 4 and it's coming to audit committee, you know, that's almost too late for us. We need to be knowing much sooner if there are concerns. So I would just urge you to communicate with us at the soonest if you did have a major concern about these things. I know you would, because we've had those sorts of conversations, but just to flag that, although this is what the policy says, we're doing something in excess of what the policy says.
It's a really valid point. Again, that's sort of trying to cover step 4, but you're right that we would try and bring that in much earlier in the process. And Councillor Chilcott, if I can just confirm, you are absolutely right. Complaints is the end of the process. I would hope that any escalation would have happened before then. And again, the relationship that we have with your senior finance team and the chief executive is very good. And if there were any concerns, we would expect that to be raised. And similarly, the chair of the committee could come to us and discuss any concerns at any point before we go down that complaints route. So you're absolutely right. Thank you.
The only other thing I wanted to raise was, although the LGR risks are in here, we don't address the transformation risks. Is that because that's falling into the sort of next financial year, into 4/5 rather than 3/4?
So we will be considering transformation risks as part of this audit for 23/24.
Yeah. Thank you. Okay, everyone happy to move on? Yeah. Thank you for the update, Barry and Grace. So moving on to item 7, which is the Joint Auditors Annual Report. It says the management responses. So if members recall, we had a set of management responses which came to committee several months ago. We asked for more clarity. We asked them to be beefed up, I think, if memory serves. So this is the beefed up version. So I've got Sian. Hello, Sian. Welcome to the Audit Committee.
Thank you very much.
Are you going to present the report?
Yes,
Yeah.
thank you.
Perfect. Over to you.
Hi, for those of you that don't know me, my name's Sian Kenny. My substantive role is a finance business partner, and I was previously supporting children's families and education, but at the moment I'm an interim financial governance lead, and I've predominantly been working on action plans around independent reviews, of which the Grant Thornton Auditor's Annual Report is considered to be one of those, and also on the SIPFA Financial Management Code. So the report today presents an update on progress. The original report included management responses, but what we've been working on over the last few weeks, a couple of months, is developing an actual action plan that sits beneath those key recommendations and improvement recommendations that were presented in the report. This report today, in Appendix A, includes the actions that relate to the 7 key recommendations. There were also 6 improvement recommendations. Our focus has been on the key recommendations because they provide significant risk. We will then be looking at the improvement recommendations and making sure that we have a series of actions underneath all of those 6 improvement recommendations. So for now, this report focuses on 25 actions in relation to the 7 key recommendations. Each action has a due date and an owner, and there are 6 actions that have already been completed. All of the remaining actions remain on track to be achieved, and at the moment there are no overdue actions. 1 action has been closed following the Council's agreed commercial investment property disposal strategy, which has meant that one of the actions that sit below that key recommendation is no longer relevant or appropriate, and the progress is presented in Appendix A. The recommendation of this paper is for Audit Committee to note the progress against the actions. I wasn't planning to go through the report in any more detail, but happy to take any questions.
Did you want to come in, Jason?
Yeah, just to add a couple of things. I hope members find the format in Appendix A helpful. It's a piece of software that we've got that we're using for performance, but we're also now using it to track actions like this, and also we'll be using it for risks as well. I think the format hopefully is really clear in terms of who you're expecting to do what by when and how far they've got with the progress. So if this kind of ticks the box in terms of that style of presentation, so I think it's better than what we've had before. And because it's on a system, nobody can forget to do anything. That was one of our concerns, which is why Sean's been picking up all of these across all the reviews we've done to bring them all into one place. We've had quite a lot of actions across the piece. It'd be very easy for some of those to slip through the net. Using this software means they can't. So if members like that, we will use that more and more. You'll see over the course of the sort of future periods, as it were.
Mandy?
I don't like it, I love it, as Simon Cowell would say. I've been watching.
I second Mandy's joy for the format.
I've been watching too much Britain's Got Talent this week, honestly. So yeah. So firstly, I forgot to say on the last report, thank you for the covering reports. We haven't had them before. I think it's really helpful, certainly when reading through 340 pages, it gives that break and gets your head into, you know, this is what this next report's about. And certainly for any of the public that might enjoy reading audit papers, I think it flows much better. So thank you for that. I think that's really helpful. I thought it was a really great table, actually, because it said it all very clearly without using too many words. So I think that was really helpful. Just a couple of comments on it that I was surprised to see. Nearly all the due dates, a lot of them were set at 31st of March 2025, i.e. as late as they could be. Always concerns me when everything's at the end of the year, because I would expect some to be aiming perhaps for mid-year or end of year. So quite often with something like this, that people tend to just go to the last possible date and then hopefully deliver better than that. The other thing I was slightly surprised to see was the adults transformation programme embedding it at 90%, yet children's was at 20%. And I was just really interested to see that disparity between the adults' delivery of it and the children's. And I'd really like to understand, I suppose, at some point a little bit more about that, bearing in mind there are sort of 2 real pressure areas. It just felt a disparity between the 2.
Have you got the detail on that one, Sean?
Yeah, so in terms of the end date, I agree. And actually, the approach that we took when I met with all of the senior responsible officers, because this is it's not mine, you know, I've coordinated it and met with them, but we did talk about the end date for all of these, and because it's an annual report, we felt that even though some of these actions actually might go beyond the 31st of March, like achieving the transformation programme for children's services is a 3-year transformation programme. So to deliver that, which is part of that action, is actually beyond this, but it's trying to cover the actions from Grant Thornton's recommendations, and then ultimately we'll have another annual auditor report to see the progress up until the end of this financial year, and then we'll have a new set of recommendations for the following financial year. There are some that were brought forward because it was more sensible for those dates to be achieved, or more appropriate for those dates to be achieved earlier. We can challenge ourselves on those dates, and I can go back to senior responsible officers and say why not sooner, but working through, we did look at it on an individual basis. We didn't just plug the end date in and work from there, so there is some logic behind those dates. In terms of the difference between adults and children's, so with the embedding and delivering adults transformation programme, Mel felt that the actual adults governance structure around their transformation programme was far more embedded in the wider organisation's transformation programme, and that the governance and the reporting into the transformation board is quite clearly defined and has already been running for the last financial year. So she felt quite strongly that it was embedded, and the forecast for delivery around the adults transformation programme is good at the moment. So she felt that to embed the action around embedding and delivering the transformation programme was quite well mature. It was quite mature in terms of over the last year. If we think about this recommendation, it goes back to 22-23 financial year. So during 23-24, Mel feels that there's been a lot of work, and that is almost 100% there. In terms of conversation with Claire Winter and Richard Selwyn, they've had to do a refresh of their transformation programme and their governance arrangements. So they felt that they weren't as embedded, because we did have a conversation about why the difference between children's and adults. So because of their refresh during 23-24, they've set up a new governance structure and new governance arrangements for their transformation delivery. And that is now embedded in the council's transformation delivery, but they've only had 1 or 2 meetings, so it's not mature yet. And they wanted to kind of press that during this financial year and see, you know, hopefully that will work, and it will now feel like it's part of the council's transformation board and transformation delivery. So that was the difference between, I guess it's the maturity and the kind of the children's services refresh made it quite different.
Thank you for that. Really great answer. But not only that, it for me validates the figures we've got in front of us. So thank you.
I've got a little queue, Simon. So I've got Norman, Gwen, Gwyl, and then yourself. Okay.
Thank you. Yeah, just to echo a comment, Appendix A, great. I'd like to ask a question about the Microsoft Dynamics side of it, the KR6/1. Continue to develop financial processes relating interfaces, and the data within the financial system is accurate and complete. I'm glad to see there's a 31st of July there for the finish of it, but does that mean that there have been some gremlins in the accuracy and you need to modify the system? Or, you know, what is it there? It just raised the question in my mind.
So for me, it's the recording and validating of it. So we're assured that the interfaces are up and working. This was one of my biggest pain points coming through Go Live, was that interfaces act like people, but they're done on an automation bit, and there's less eyes then on it because you rely on it going through the system in an automated manner. So my target for this week, next week, we've got a internal system support team that's a mix of IT and finance officers, is to have an interface dashboard. Not only does it tell us the success of an interface posting, but actually going right back to that interface catalog, which is What are we expecting to receive into Dynamics? Did we receive it? Was the information in there complete? Then the success of it posting into the system, and then into the reconciliation side, are we expecting on our budget monitoring or any outputs? And for me, I haven't quite got that whole throughput of evidence on an easy to see dashboard. We know they're posting and we error handle where they don't work and we resolve them. But I just want to be much more proactive, being able to see it. And if a file never received from a subsystem, we should know that instantly, rather than react to because we didn't create something at the end of it. So that's what I'm focusing on in terms of that finding.
Will?
Thank you, Mr. Chairman. Yes, I was interested at the progress bar because perhaps in my naivety, I wondered whether these were all being handled as a project with milestones that were being met over time. But I think the answer we just had from Sian seems to indicate that some of the judgments are subjective from the project owners, which is all right. But I just wondered about the level of detail. And if you take the Adult Services Transformation Programme as an example, I wondered if it's appropriate for that scrutiny committee to be across the detail of that in specifics, or does all this just devolve back onto this committee? Because clearly, you know, it about wanting to sound rude or anything like that. I mean, if the officer's judgment is all fine and dandy, actually the reality might be slightly different. And I was just wondering if there were project plans with defined milestones in, that gives you a much better handle on what's going on, rather than a feel that everything's going okay.
So you're essentially asking for what assurance we can get that the progress is.
The detail behind all of these figures is actually being looked at by the appropriate scrutiny committee. Is that appropriate?
Sian?
Sorry as well. And in terms of the subjectiveness of it all, my role is to not just type into the system what the senior responsible officer is saying is the update. So also behind this, I've asked for evidence of why they feel it's at 90%, 20%, 40%. And in the system, which is really a really clever system, I've been able to attach documents and related evidence to kind of back where the owner feels subjectively that they are. And if so the conversation is more about my challenge of the owner to ask them about why they feel that they're at that particular level in terms of my role as a financial governance and kind of my scrutiny of those actions. In the future, the idea is that the owners will access this system themselves and update their progress, but I or somebody will have a role to scrutinise that. So it's a good question as to where the officer scrutiny is. I think that's within Jason's team, within finance, to challenge whether that financial governance and that financial scrutiny is there, but also where does that sit with members? The way the system works is that at some point in the future, the plan is to have risk and other related actions all linked in the system. It's got the ability to do that. We just haven't set that up yet. And ideally, if adult scrutiny is looking at a problem, the system should be able to pull in all the actions that relate to that problem, all the risks that relate to that problem. And the conversation can be about the actual issue and what's being done to change that or mitigate against any risks, not have independent reports. So the scrutiny committee won't necessarily just get a finance report and then another meeting get a risk report and then another meeting get a transformation report. The subject matter will bring all those things together through the system. So the scrutiny should be better in terms of the reports that are being received will bring all those things together. This report as well, alongside all the other action plans on the independent reviews, are going to go to the Performance Risk and Budget Board, which Liz chairs. And that board will get more detail behind these action plans. So behind these, there's a kind of a more sophisticated and fuller report that can come out the system with notes attached, and they can then look at the system and look at the documentation and scrutinise the progress in that position. So that's a board role, the PRB board's role in looking at those, and they'll get quarterly reports to be able to do that. So that's the kind of governance around the activity that we've set up.
Yeah, of course, Will.
Thanks. That's very interesting, very reassuring. I mean, I think what slightly bothered me is that you've got different levels with cracks in between, and it's making sure that all the cracks are covered or at least have a safety net. What you've just articulated means that the level of detail that has to go into the system at the outset is quite high. You actually, I mean,
Hello.
you're asking. Hello.
Sir,
What you're
please
asking
leave your
is.
name and number, and I'll get back
Sorry,
to you
can
as
we
soon
ask
as
whoever's
possible.
online with their
Bye.
microphone unmuted?
When you finish
to mute,
recording, please hang up or press.
The hash
Thank
key.
you.
Okay, right.
Sorry, Will, carry on.
Yeah, I'll start again. What I'm saying is that in order for the system to get out what you want, quite a lot of detailed information has to go in at the start, which I'm assuming is down to a level of business planning at the outset. For, you know, if you say this is what we're trying to do and this is what it will entail, these are the various milestones, and then of course you can read the system, as you say, is much more sophisticated than previous management systems. We'll be able to extract that data and actually say, well, this is objectively where we are against those particular targets. Is that a new thing, and how well versed or trained are managers for putting this kind of information in? Because there's always the old adage about junk in, junk out. And I think what you've said sounds really excellent, and particularly the level of detail that can be drawn out. But I think I'd like an assurance that everybody is capable of using it properly, so we get out of it what we need.
I mean, in terms of the system user friendliness, I was given access and had an hour's session with somebody who's already quite familiar with the system and can set up reports. But that hour's session was to enable me to be an administrator, not just a user. So it was relatively easy for me to become an administrator of the system and set up these action plans. Ideally, in the future, once an independent review comes in and service will receive the recommendations, the findings, the recommendations, and will start to build its own action plan if it agrees that it's going to go ahead and work on those recommendations. At the moment, this is in a plethora of places, some spreadsheets, some Word documents, some PowerPoints. That information with good governance should be input somewhere. So at the moment, it's in lots of different places, and the ability and the efficiency around then connecting all of those things is hard work. And so every time, for example, Mel needs to produce something for a scrutiny that will bring in her risk and her action plans and her transformation program, she's got to draw that from lots of different systems. The input has already happened, but in a spreadsheet or in a PowerPoint deck or something equivalent to that. If the input is done at the source, at the point where the independent review is received, the recommendations are agreed, there needs to be an action plan, and the input happens then, the efficiency is further down the line, where then you don't have to try and bring all these different reports together and retype things. I started doing this in an Excel spreadsheet, and I was trying to add links to the spreadsheet, and it started to crash. It couldn't cope with it. There were different documents and different SharePoint sites. I couldn't bring them all together. I managed to do everything that I'd been spending months doing on a spreadsheet into this system in a matter of weeks, just by translating that information into here. And having those quick conversations with the senior responsible officers, ultimately because they don't have access to the system at the moment, so we need to set them up. But once they have access to that system, there'll be trigger emails. They can click on a link, they go in, they update their progress bar, and they update the notes if they want to. They can add documents that are already present somewhere else, and they can link it with a related to another risk. And so the efficiency, the overall process, I think, is more efficient. The input is still probably at the same level, but easier done, and then ultimately linked together at the end of the process.
Sean. Simon?
Thank you, Chair. I suppose I'm leading on from what Will and Mandy said to an extent, in so much as that with these targets, if I look at the children's and the adults one, what worries me is how the percentages are decided upon, and that there is a lot of subjective opinion as to how well somebody's doing. And that could be a manager being complacent, thinking we're there or nearly there, or personalities of managers. So some might be more challenging of themselves. And I'd like to think that we never got to 100% on some of these targets, because that would mean we're not continually reviewing and checking that we have embedded something. Say we've embedded something is relying on those managers doing their job properly, but also it's are those managers the best people to judge or challenge that something is happening within their area?
So I think the PRB's role, with Liz as the chair, is to oversee those, are those challenges realistic? Ultimately, Grant Thornton will be coming in, looking at their previous report and looking for evidence around progress, and they will be making conclusions and findings around progress, but also around whether this is something that needs to a slight change in the kind of view or the actions or the recommendations that need to be made, even if it's along the same line of the transformation programme. It might be with a slightly different lens and looking at where the next set of recommendations and actions will need to happen. So this will be validated on an annual basis through Grant Thornton's auditor's annual report, and the progress will need to be evidence, hopefully already in the system, because we'll be collecting the evidence as we go.
Thanks. 1 second, Liz. Is the plan for us to receive any further updates on this report? Will we get this report coming back to us in future, or will this format just be used for other types of report along this line? Where do we take this from here?
I think that's up to you as the committee. It's all in the system, so if you want a report, it's very easy to spit out the appendix and give you an update.
Yeah. So at what frequency do members wish to see this report? Simon said every meeting. Are we talking about?
I've added that to my work programme question for the end, Chair.
We can have the conversation now if you want. How frequently do you want to see it?
If it's hitting a button and it's not onerous, then sure it should come back each meeting.
Pardon me, Chair, if you don't have it regularly, you are 3 months behind the curve to picking up on an issue. My view would be that it should come to each of our meetings so that we can have a comparator with the previous state of play, so we know where we actually are, as opposed to where we would like to be in 3 months' time and not know about it for 3 months.
I mean, that's fair enough. I've got Liz to come in unless you want to come specifically on the question
On
of
that point,
frequency.
in terms of the comparator, is it possible to sort of use different colours for month 1 progress, and then the next report comes in with a yellow to say where it's moved on, just to help us, rather than sort of trying to compare two things and see if they've moved?
Sean, have to
I'll
look
have
into
to talk
that.
to Simon about that and check with him. But every time I've asked him a question, can it do this, can it do that, he keeps saying yes to me. So I'm assuming that is possible.
Yeah, I mean, it's just so make it easier for us to see what's moved and what hasn't moved.
All right, so Simon's colourblind, so we might have to go back to square one. Okay. Okay, well, I think there's a big thumbs up to the style of report. I think visually it helps us to track these sorts of issues and progress across the organisation. I just asked Jason a moment ago about KR 7.2, which is about procurement waivers coming to Audit Committee regularly. So these are any items which have been procured outside of the council's normal processes, so where we've not gone out to tender, etc. And I'm assured that we will be getting a report coming to committee, just in case committee members are concerned about that. Right, I'm going to come to Liz, who's been very patient. Thanks, Liz.
I'm quite happy to be patient at this stage, Chair, because I think seeing this first report is just the beginning of, I won't call it a revolution, but it's going to be a very different way that we will be reported to as members. And I thank Sian and all her colleagues for the work, particularly Simon, for the work that they've done in the early stages of this. I also want to reassure you that regarding the Performance Risk and Budget Board, that the Chief Executive, Duncan Sharkey, is very much involved and has been a really keen driver of that piece of work of setting up that board. And if things go exactly as we hope and plan, where you see on this report at the top of Appendix A, you see generated on the 16th of May, when risk is in the same software and risks are then exported to go into committee reports, I've asked that the generated date be included so that every time we're seeing risks in a committee paper, we know the date on which those risks were correct and relevant, and that we understand that things can change, and that officers obviously will be able to get in and work with what will be a very dynamic system. And Jason will, as time goes on, he'll explain as well how budget monitoring as well as risk monitoring, particularly the strategic risks, and the performance monitoring will start to come together in quarterly reports. So the first meeting of the PRB board that I chaired was very much about process and framework. Once we get all of that in place, then it becomes a proper challenge board, and we can really have a look at where things are going well and where they're not so good. And on adults and children, something that's been really interesting to me, so I'll share with you, is my colleague, Councillor Heather Shearer, of course, did a period of time as lead member on adults and is now on children, families and education. And she said to me, so this is informal feedback, she said to me, although adults is a bigger spend, she sees children's as much more complex, that there are far more threads of work and that it is very much more complex and less predictable. So I thought that was one of the most useful pieces of feedback I've had from a colleague. And I think actually we should share it more widely than just audit, because although it's a small amount of money, it is less predictable and more complex.
Thanks, Liz. Manny, have you got a burning question on this issue? Because I'd quite like to move on if we can.
Super quick. That board, Liz, just started, which is really good. They're looking at risk. I'm just wondering when it's established further down the line, if our chair has time, I wouldn't mind actually him being able to have access to that board just to report back how it's going. I think that'd be useful.
You'd be very welcome, especially if you bring cake.
Might be pushing it, but I'll see what. Right, Sian, thank you so much for your report there. I think members have overwhelmingly given the style a thumbs up. I think the answers you've given today have been very full and robust, and thank you for your clarity. Okay. Right, moving on to item 8, which is the progress report on the internal audit plan. So, morning, Alistair.
Thank you, Chairman. Yeah, so this is the 23-24 internal audit plan update. Before I do give an update on this, just going back to the previous agenda item, so you may think back to March when you approved the 24-25 internal audit plan. We did take a lot of information into account pulling that plan together, and it does cover those external audit recommendations. So we are looking at contract management, we are looking at adult social care, we are looking at the DSG deficit management plan during 24-25. So you should get some additional independent assurance from the work that we're doing. But I'll just highlight that. Okay, so moving on to this paper in question then. So this is the 23-24 audit plan update, and it will be my final update for the 23-24 audit plan. Any outstanding work I will just append onto the progress update reports for 24-25 to save different reports coming to you. So agenda page 90 gives you an overview of the plan. And the purpose of this report for you is to make sure that you can see what work we're delivering, where we are with the audit plan, and for me to highlight any changes to that audit plan and to bring to your attention any significant governance, risk or control matters that have been highlighted through our work. And so any audits where we give limited or no assurance, I will bring those to your attention that highlights that governance and controls could be improved. Agenda page 91, there is one thing I do need to bring to your attention as required under the internal auditing standards. I need to comment if there's any resource implications for us to deliver our plan. I have got 2 members of staff that are leaving. We are in a recruitment process at the moment, so I'm looking to make sure that that impact is minimal, but it does mean there might be some slippage in delivering of the work. But in terms of the extent of that, I don't know. But as I said, because we're recruiting at the moment, I expect it to be minimal. Agenda page 93 gives you an overview of the internal audit recommendations that have been summarised throughout the year in terms of 23-24, and it shows where they are against each directorate. Obviously, we will be looking to update and amend this dashboard in line with the new structure. You can click on the link as members of the committee that will take you through to the detailed dashboard and the individual recommendations themselves and the latest progress updates that we've had. One thing I would like to comment on this is around health and safety. Obviously, we did a health and safety governance review earlier in 23-24, and I have had quite a lot of information from the health and safety lead on the progress that's been made. But given this is a strategic risk on the risk register on the next agenda item of health and safety, it might be something that you want to consider as an agenda item in its own right, just to have an update and to get yourselves your own assurance around governance and how those risks are being mitigated and moving forward in terms of the authority. Agenda page 94 highlights no additional changes to the 23-24 audit plan. Then moving on to the significant findings that I just need to bring to your attention. Agenda page 96, this highlights the whistleblowing policy and awareness. I won't go into the details on this because I think it's quite self-explanatory there in the report, and you've also got the link to take you through to the final version of the report as well. Again, for the clarity of the new members of the audit committee, wherever we do give limited or no assurance, we will endeavour to schedule in a follow-up audit to make sure those recommendations are implemented and to give independent oversight to those recommendations. So agenda page 97 does highlight where we've conducted a follow-up audit around school condition surveys, highlighting that those recommendations are predominantly have been completed and implemented. There is one priority 1 recommendation that was almost complete, and if you do read the description there on page 97 that something was supposed to happen from the 1st of April, I understand from the beginning of May that has started, so that recommendation should now be shown as complete and moved on. Agenda page 98 through to agenda page 105 just shows the complete summary of the internal audit plan and where we are with it. What I do need to bring to your attention is on agenda page 103. So there was a Homes England capital funding grant piece of work that we did. Now this was on behalf of Homes England. It's there highlighted as an advisory in the grants. Basically, we're undertaking the testing for Homes England, and given the feedback that we give to them, they will then produce a report that is sent out to the authority. That report has been sent out, and they've made 2 recommendations that must be implemented before the end of August. So we've added those recommendations to the tracking database, and we will do some work around making sure those recommendations are implemented as they are a requirement by Homes England around the grant funding. So we will work with the service to make sure, as I say, those recommendations are implemented and the evidence is forwarded on to Homes England to show that that has been done. In terms of work outstanding, you can see that on agenda page 100 and 101. Those are the audits that I will append to the top of the 24-25 audit plan going forward, and they will be clearly marked as 23-24. The status of these audits has moved on since I wrote this report, so hopefully there will be some more updates and we can wrap that work up as soon as possible. Happy to take any questions from members of the committee.
Okay, Simon.
Thank you, Chair. Yeah, page 93, I was slightly concerned by the number of that were still outstanding. 91 days plus, there were 48 still outstanding. Sorry, the screen's gone stupid on me. There were 48 still outstanding, 91 plus days, which is always a concern. Because anything that's 3 months over is needs attention, as far as I normally suggest to you.
Right, thank you. Completely agree with you on that. One of the things we will try and do is through the restructure of the organisation is make sure that officers assigned to the recommendations, if they are leaving the organisation, that appropriate other officers are assigned oversight of them. Obviously, there's a lot of change going on in Somerset Council at the moment, and we are conscious of whether audit recommendations are still applicable and managing risk if services and things are changing, but also making sure there's good oversight of them. So one of the things we will be talking about, and as Sian has mentioned, with Pentana, it is a software system that was used by Sedgemoor District Council historically. And when we did audit services for Sedgemoor, all our recommendations were uploaded to Pentana and monitored through that. So that will be something we'll be looking at to see if that is going to be a way forward, just to make sure there is still good oversight. Because from my point of view, any audit recommendations assigned to an officer should be in their one-to-one monitoring framework.
Thank you. Thank you, Alistair. Thank you for the reassurance. What I'm looking for is clarity that yes, there's been some turnover of staff. Yes, there will be new officers allocated to the various projects. But I still see 91 days and 48 items that are overdue, and I need the reassurance that those 91-day plus are being looked at as a matter of urgency, rather than, I don't want to see in the next quarterly report that's leapt up to any other number, and that you know, we've still got some of the others not yet due, and within 30 days, one to 30 days overdue. I don't want to see those numbers, all those numbers rising. We need to be confident that those numbers are under control and being worked at.
And likewise, the number of open priority one actions as well. We can't see the spread of which priority actions are in which time period. So we don't know if it's a load of the priority one actions are just overdue, or if those priority actions have been waiting for some time. So I think if we've gone to the trouble of saying that actually these are the top things we ought to be working on to resolve these governance issues, then we need to make sure that they're being prioritised in the organisation. So what assurance can we have around that, Alistair?
I know at the Statutory Officers Board, it's been discussed around recommendation tracking the process at the moment. So you're clear on it. We do take a quarterly report to DMTs where relevant, showing the outstanding recommendations. Some directorates have assigned a coordinator to help track and push recommendations and get updates from officers. We are designing an escalation process as well to give more oversight and clarity to it. And I know the CEO is keen to make sure that these are picked up and are included, and people are challenged if they're not implementing them.
Andy.
Thank you. I think it's a really good point around governance, really, about that ownership of all actions across the authority as we, we'll call it downsize, restructure, whatever you may. I think it's a real challenge sometimes, and I know, having worked with Pam previously, some owners of risks weren't there anymore, and then they weren't updated and were showing on the system. So I think when someone does leave the organisation, there'll be so many different things that they link into. It's making sure everything flows through and follows on, and I think that'll be a real challenge for the organisation moving forward. So my question actually is one that's sort of slightly linked to this, but I may need a written response to, and it relates to school condition surveys. Now, I think we'll all be really aware that there's a lot of work probably needed doing in some schools. The work is rated, you know, those urgent works take priority. My understanding is we've had some more money out of government, a bit more than we normally get. So my question is really having some reassurance that all of that money will be spent on school conditions work, and that it is covering the sort of health and safety work that needs doing. And if there's anything more that's not urgent, then that would be great. And I've just connected that to the school's condition. I know it's not information we'll have to hand, but I would love to have an email.
Shall we ask the chair of Children's Scrutiny to come back with a response on that specific question?
I don't mind who it is, but it just triggered when I saw the school conditions survey.
Jason, can you ask on our behalf for assurance from the Chair of Children's Scrutiny that's being captured.
Yeah, and also get an update from the service manager responsible for that area as well, in terms of where they are with that, in terms of the funding, the priorities and how that's been used, etc. So get a written response back to you. Happy to share that with all the committee if that's helpful.
Thank you. I think it's something that's close to Councillor Lation and myself, and we are aware that, you know, there are always a long list of works that need doing.
Thank you. Right. I'd quite like to move on unless anyone's got anything burning. Liz?
Could I just clarify that the software that's called Pentana is now the software that's called IdeaGen, that we're referring to IdeaGen. Before it was Pentana when it was with Sedgemoor. Sedgemoor were early adopters, as Angela Farmer would be able to tell us. And so I think it's called A Good Deal.
We have got a very good deal, yes.
Yes,
excellent. We took it on when it was surveillance, local company here. So we've got a really good financial deal with unlimited.
Brilliant.
The benefits of unitary, Chair. Wonderful.
Right. Okay. Thank you, folks. Thanks, Alistair. I think the report is noted, and we will look forward to the final report. So moving on to item 9, which is the strategic risk management update and plan. Hello, Pam. Hello, Angela.
It's going to be me today, Chair. So, good morning, members. A couple of updates for you from a strategic and from a risk management point of view. The first one, obviously, is risk management has moved directorates. We're now sat within strategy and performance. It makes the links stronger between performance and risk. And as Sian has identified, obviously, that combination of performance, risk and budget will give a better overview of services as we move forward. As you've all said, we are moving the risk management system to IdeaGen from JCAD, and we have got JCAD until March next year. So there is a piece of work to do to transfer the risks over. That said, we are currently working with IdeaGen just to update the risk of information so that it actually, when we do import data, actually imports into the right place, and plus the fact as well that we have the right information that we need from a risk management perspective. We will be putting risk on there though, transformation risks, fraud risks, and hopefully the new set of strategic risks will go on there over the next couple of months. And as you would have seen from Sian's report, obviously we'll be start reporting in the new IdeaGen format as well. In respect of the committee template, which was raised at committee last time, obviously there's a report in an overview of the potential changes to the template. There was a piece of work asked by, I believe, the chair on an overview of how the risk template's used in other committee reports, and I've done a brief piece of work at Appendix 4. I did use March, which is probably not the best month to use, but it was probably a shorter month to use, so my apologies. But it does give you a little bit of an overview. I'd have to say probably risks are reported where you expect them to be reported, which is executive. And a lot of reports that go to prior committees, such as scrutiny, will go on to executive anyway, so risk is reported. A number of committees do have report on a different template, which is a much simpler template than what you'd see for this committee or executive. So risk isn't a prominent feature in those reports, so risks aren't being reported through those templates. There is potential to miss some of those risks in those reports, especially if that report doesn't emanate onto executive or your good selves. The other noticeable thing is a lot of committees, HR committees is a good example, are actually just PowerPoint presentations. They're not actual committee reports. So again, you do have the potential to miss risk. Some of them, I think there was one from one of the schools or education reports did have a page on risk, but there is a potential to miss risk. So it was an interesting journey to look through some of that stuff, but it's something for the committee to be aware of. In respect to the committee, committee template, as you'll see from the report, we have put the proposals to Democratic. We haven't heard anything further back. The intention is really to try and sort of covered it from a number of different angles. The first one, obviously, is to identify any existing risks within JCAD.
that follows through, sorry, idea Jen, in due course, apologies, Freudian slip there. But to follow through with ensuring that we do make those connections between risk and whatever the report is, the report subject. There will be the opportunity to identify new risk. Now, new risk in a committee report is very much about the risk that is emanating from the subject matter being reported. What we're saying is, look, just identify the risk, score it as if without mitigation, so what we would call an inherent risk. So members can see that in actual fact, you know, that raw risk is X and is going to be scored at probably high, very high, may even be low, whatever. So you've got that information. If the report does not mitigate that risk, so a lot of what in the past what I found is a lot of people will identify risk and actual fact the recommendation to do X, Y, or Z will actually mitigate some or all of that risk. If it doesn't, then obviously we'll put in a process where we'll pick that up and ensure that those risks are picked up and put onto the register. Moving forward, obviously strategic risk review update is attached as appendix. We've got the register there. We've got 16 risks, 8 very high, 4 high, and 4 medium. The report sets out some changes. Both of the 2 very high financial risks that we had prior to April, Jason has gone through and reviewed, and both of them have now had a reduction in their score. Jason has very kindly agreed some updates, which has the reasons for enabling the reduction in score. The general housing risk that we have, which is about the failure to continue supply of housing, has actually gone up, and we have now some controls within there which we previously didn't have. We will continue to, as I said, strategic risks are currently under review. That review is instigated by the Chief Executive Officer. That work is started to happen. We've got a number of potential areas of strategic risk we need to review. I would like to think it will come back to a future committee. I don't suspect it will come back to the next one in June, but I would imagine one probably September committee it will come back to. The last piece just like to identify is the risk matrix, which as you know, Lindy in previous committees has identified a couple of anomalies. I can say that word rightly. We have updated it, and the new interim matrix is before you. It was a supplement to the papers because we had some discussions at PRB as to the sort of like the high, very high, and things like that. So hopefully that will be, if members agree, then that will be in placed from June until December 24, after which we'll review it again. So we've taken it down to sort of 3 particular layers. You've got obviously your red layer, which is 16 and above. You've got your what we call yellow layer, which is 15, 12, 9 accordingly. And then you've got green below that. We're proposing that risks which are either 1 or 2 are not recorded, but then that to a certain extent that might just be, that's also an option if people do. So that's before you today. I'm happy to take any further questions.
Who'd like to go first? Rosemary or Mandy? Let Rosemary go first.
Yeah, I happen to feel the way things are presented and the way the agenda was put together, you might as well speak Swahili to me because I have no idea where the 2 match up. And I had some questions from reading the papers, and I'd like some answers to those. On page 118, you talk about commercial investments, but the borrowing, why it was borrowed and the way it's been handled is 2 different things. Investments the commercial investments, as I understand it, was to give a long-term help to the council, but they're being sold off individually for short-term gain. And it will never work if you invest in the stock market, as some of us do. You either go for long-term and take less, or you go for short-term and take a risk. So which are you doing? That's the council I can ask, not the auditors might be able to point us in the right direction, but none of it makes any sense in the way it's presented. I'm sorry.
Right, I think I'll probably get Jason to answer some of that, but one of the difficult things sometimes for people to get their heads around, Rosemary, and this isn't just directed at you, this is a general thing in local government, is that you don't borrow for one specific asset, you borrow to fund your capital requirement. So the borrowing's not necessarily attached to a specific asset, although sometimes when the borrowing is initially taken out, that's the way it's couched. I'm right in saying that, Jason? Is that fair? So sometimes it becomes difficult then to disentangle that borrowing overall. So it becomes difficult to flow that through the papers.
Which means if you're handling everything overall, it's a right mess, isn't it?
Well, not necessarily, because you're borrowing to fund the council's capital finance requirements. You're not borrowing to fund a specific asset. So there are two fundamentally different approaches as far as I'm concerned. Jason, I'll bring you in to clarify.
Yeah, so in terms of commercial investments, remember, Somerset Council started on the 1st of April 23, inherited position from the predecessor councils. That was a mixed position. So you had the county council had no investment properties, 4 districts did. One of the districts had early invested in the investment properties and had fixed its debt to fund those. The other 3 hadn't, so they were actually financing longer term investments from short term cash. So you've got that dynamic that's happening as well. And obviously since then, interest rates have gone from the 300-year low of 0.1% up to where they are now at 5.25%. If you're borrowing 200 million, that's quite a lot of increasing costs. So actually, when we looked at the portfolio from Somerset Council's point of view, it wasn't actually making a return for the council. It was actually costing the council. So that's where the decision to dispose of the properties come from. You're right, there should be a long-term investment with longer-term debt set aside to them. That wasn't the position this council inherited. On top of that, I think you have the government policy that's been really clear in terms of their guidance to councils and how they have subsequently changed the rules around council borrowing to say they don't think council should be in this business. They don't think we're skilled enough to do it, haven't got the right setups to do it, and shouldn't be acting as property developers in terms of trading properties, that type of stuff. So the government have made it quite difficult for authorities to borrow through those routes for doing that. So you've had the kind of government policy, our practical position. Overlaying that, then we have our capitalisation direction and the need to fund £77 million. Actually, we could go out and borrow that. We pay an extra 1% premium on that debt. So when you add it up, it's kind of close to double digits to finance that debt. So actually, the cheaper way of us doing that is by asset disposals. So it's kind of those 3 bits all joined together. I think the short answer is you wouldn't have really wanted to start from where we are, but unfortunately, that is the position we've inherited. So we're trying to untangle that as best we can do.
Right, I've got a little queue. So I've got Lindy online, and then I've got Tim. Mandy, do you want to come in? Yeah. Any other hands? No. Lindy, good morning. I'm sorry you've had difficulty getting in online, but the floor's all yours.
Thank you. Good morning, everyone. I'll just email my questions that I had on the external audit plan for the new year, as well as the internal audit report that was discussed and which I missed, unfortunately. All right, so I must say thank you very much to the risk team. It's looking much better. I just have a question on page 116 on the risk org 70. If you look at the second scoring, the current score, it is 5.5 and then 15. So I assume the 5.5 need to be updated because 5 times 5 would give you 25, not 15. And then I've noted a similar error on page 119. If you look at risk number 68, there's a 0.0 in the inherent score. However, the current and desired is 16 and 12. So that must have not pulled through. And then just the last one on page 121, there is risk number 66, and the score on inherent is 4.4, which should be 16 and not 20. Thank you, Chair.
Put our hands up and we'll put it down to typo errors, so apologies. Yeah, thank you for picking those up, Lindy.
Thanks, Lindy. Did you have any other questions, or is that it?
That is it. Thank you.
No
And
problem.
thank you for the progress plan with set out in the 3 different phases. It helps us follow where you are at and what you've done so far. So well done. Thank you.
Perfect. Tim, and then Mandy, I think it was.
Thank you, Chair. Page 116, risk 62, the health and safety management, especially with schools. Now, it seems to me that almost all these other high risks contain factors outside of our control. This one, I would assume that we pretty much have full ownership of, yet the risk still remains at 12. Is that because of the severe consequences of the risk? Thank you, Chair.
The 12 score is actually what they would call the target score. So the first score is 25, so that's before any mitigation. The mitigation is in place, is put the score down to 20. So the target score is 12 at the moment. It's not a score that we're currently monitoring. The current score is 20. So it's one we aspire to. It's not necessarily one we're working to at the moment.
Okay, Mandy.
Thank you very much, Chair. So first of all, probably the most comprehensive risk report we've ever seen in the committee. I very much welcome it and welcome the work and some of the background that's been done in bringing the report. It's a lot of work and it's appreciated and I think needed. I think we've probably got more serious risks facing us for a number of reasons than we've ever faced. So it's really important that we get on top of it as a committee. So my first question, I suppose, concern is around the move from JCAD to IdeaGen, where we've been asked to note that, but there's no dialogue in the paper at all about it. And it would have been nice to perhaps have had a little presentation just to understand why the move and what it's going to deliver, i.e. will it deliver what we need it to deliver? So that was my first question. It's my second question, well, a comment actually is on page 110. It outlines that there's no consistency in terms of how risk is presented in reports. And I really, again, thank the team for the work on that, because I've been banging that drum for a long time. And it's nice to see it's been looked into and formed part of a report. And in fact, later in the reports today, we will see some risk that isn't laid out in that manner. And I think that the quicker we can get to sort of that consistent approach and consistent presentation, and for it to have the priority in the papers that it should have, I think the better it will be for all concerned. My last challenge, I suppose, is around the ORG 0070, and it says in the paper that that's been reviewed and that there's a downgrade of that risk. I suppose I'd like to challenge that. I can't agree that a sustainable MTFP should be downgraded from critical to major. I suppose my thinking behind that is we haven't had the Q1 figures yet. We're still facing 100 million shortfall plus next year, and over 80 million of this year's shortfall is bridged with the use of one-off funding, i.e. reserves and an in-principle capitalisation direction. That's all there in fact. The financial strategy showed that even if every plan saving was delivered to the maximum, it would barely balance the budget, and that's without any additional pressures arising between now and next April, which could happen. From page 115 of the report, it says that taking out reserves held on behalf of others shows the forecast reserves position of 74.9 million by the end of 25-26. and the forecast budget gap for 25-26 of 103.9 million is in excess of the forecast level of reserves of 74.9 million. And we have to remember that the current usable reserves are just above the recommended minimum of 30 million. So for me, when I look at all that, and it's all been through a number of papers, I cannot agree, and I am up for challenge on it, that should be reduced. And I'll just leave it there. I hope you don't mind the challenge, but when I just look at all the facts that are there through this paper and others, it doesn't fit.
No, Mandy, I think that the challenge is always welcome. I think what I would like to do is bring the management response on that in, so that Jason can explain where his thinking is at the moment, and then we can probably we'll take it from there.
Yeah, these risk scores, they're always judgments, and they're always at a point in time. I think in that one, the reason why the likelihoods moved down, if you look at the risk table, likelihood of 4 is a 50 to 90% chance. There is likelihood of 5 is 90% plus. I think at this point in time, and that might change in a couple of weeks' time, so I need to be really clear on that. Risk is dynamic; it does move. Is that if you see the bottom of page 115, some of the comments around that, we have now an approved financial strategy agreed by council that says how we can balance the 25-26 budget. So we have a plan. Clearly, if we don't deliver on that plan, the risk will go back up again. But at this point in time, we have an approved plan. We have the workforce programme in place. Council last week approved some voluntary redundancies, and we're into the compulsory redundancies programme coming shortly. That will significantly reduce the staffing base. Again, that ticks to the direction of travel. There's been a huge amount of work done around the dedicated schools grant. It's not there, but it's in a far better place than what it was before. And the final one that kind of completes the picture is around DLUC, and conversations with them is that we can amend our capitalisation direction. So if the 23-24 outturn is worse than expected, then you can amend your figures, etc. So taking those bits into account is why I've called it a 4 rather than a 5. I think also actually one of the things that today affects me of why I'm slightly in the 4 rather than the 5, and I think it's a fine judgment call, so I'm very happy to be challenged on it, because either could be right in truth, is I think the general election being slightly earlier is actually good news for local government, because it means our finance assessment, which comes in December, whoever the government is, at least got a few months to think about it. If there'd been a late election, I think that pushes the risks up to local government. That'll be just a rollover budget, which will mean bigger budget gaps. So I think today, on balance, and it's not a perfect, yes, I'm right, you're wrong, Mandy. It really isn't. It is on a whichever way. I could be persuaded over a cup of coffee which one I call it. I've called it a 4 because of those things in place. If something slipped, so if the financial strategy, if action was not taken in the next few weeks on those various things, then it would very easily go up to a 5. It like I say, I think it's on a knife edge of where it is, but I called it when I wrote the report as a 4 rather than a 5.
Happy to disagree, Jason, and we have on things in the past and we'll still be friends after. I just still think with the background, you can have a plan in place, and a plan's a great thing, but it's actually now about delivery of that plan, and that we've yet to see.
And absolutely, and I think this is where you've got to be careful of risk scores. They imply a precise measure. These are judgments, aren't they? What it indicates, whether it's a 4 or 5, this is one of the biggest risks facing this council. Whether you score it on a 4 or a 5, it's still one of the biggest risks facing the council. And if something goes wrong, it will cause major impacts across the council. I don't think anybody's in doubt that. The fact we're discussing it actually is really helpful, because I think the worst thing you can have on these risks is nobody talks about them. That's when it's a reality, isn't it? But yeah, take all those points on board.
Right. Norman?
Sorry about coming in on tail end. page 117 or 191, whichever way you look at it, general housing failure 64. It's just to take issue with a couple of items there. The reduction in homes, yes, it's a serious impact, but it has had the phosphates issue a huge economic impact on the community as well, and phosphates by and large are being unlocked now. That's fine, but it is still a hold up with the legal profession and getting the Section 106s out the door to get this system moving. So there's still, if you like, a log jam there. And the other one is to step over the line. And I'm sorry about this, Jason, in advance, but in defence of Councillor Woods a little bit here, I'm afraid. And that is the previous page and the commercial investments and liking it, the shares. I'm aware, as I'm sure everybody is, that our average borrowing is now 4.83% across the board. But it does seem a nonsense in some senses. Selling commercial property, for instance, at 2/3 of its value, from 21 to 14 million, when we've had to refinance at 5.25%, we're on a 20-year payback of 5%, which makes it 10.5. I know it's still cheaper than the 1% extra. I'm also aware that we're losing money on it, but by selling it, we're realizing that crystallizing that loss, and effectively your 14 million is having to pay back 21 million. So effectively it's a 50% increase. So you are, as an individual, costing a 15% for that money you're spending at this moment in time. And I wonder, you know, if we were able to act in a different manner, whether we would take that rather than take the 11%. Sorry.
Was that directed to Jason?
Well, whoever is appropriate.
Oh, hello, Liz.
I'm quite happy to accept, and I'd be the first to say that it's pretty disappointing that government encouraged local authorities to invest in commercial property, and they did encourage it, or they would not have allowed the borrowing through PWLB. I wish they hadn't. But I do understand why all 4 districts did it in order to protect their services. I get that. And I understand as well that it's not just about sale price versus purchase price, but it's about loss of income in the revenue budget as well. But we do have now a totally different government, or we have had recently a different government approach than we had back in 2016, when I think Mendip was the first of the 4 districts to start investing in commercial properties, and did fortunately anchor the borrowing. But then you anchor the borrowing for a period of time. The MRP is equally important. And that is one of the reasons why the debt cost for this council now is higher than it was for the individual districts before. But don't forget as well that the county council particularly, but also some of the districts, had investments in pooled funds like the CCLA, and their value is also lower than it was before COVID. COVID has changed a huge amount, so have the interest rates, so has inflation, and I certainly would not be arguing with you about the disappointment of this council having to take those actions at this time because of the financial emergency. But we did have to write to government. I think it was it me that wrote that letter, Jason? I think I had to write 2 letters. One was asking about the possibility of council tax going above the referendum limit. And the other one, we did have to agree that we would sell commercial investments before we could talk to government about a capitalisation direction. So it is not a decision that was taken in isolation, I can assure you. Thank you.
Right, guys, can I focus us back onto the recommendations, which are on page 108 of the report? So there are 2 distinct sets of recommendations. The first one is 6A, Audit Committee receives a risk deep dive report from an exec director each meeting, providing a narrative of the strategic risks and the steps they've taken to mitigate and manage each risk. Are members happy with that?
Chair, I did think that was minuted from the minutes we've approved today already, so I wasn't quite sure why it was there, but
Yeah.
support it.
That's fine. And the second block of recommendations set out in point B, are members happy to note those as well? Yeah. Fine. We're going to move on now because we've got a huge agenda still to get through today. So thank you for your time. Would members like a quick comfort break for 10 minutes? Yeah. Okay, so committee will convene again at 12 o'clock. I understand that Barry and Grace do need to leave shortly after 12. So if you do want to ask any questions of the external auditors, you might want to ask it quickly.
The financial regulations recently, there was something that I asked to have added to the audit list of what they do, because it was covered in the financial regs that audit do it, but it wasn't in the list of what audit did, and I'm just trying to recall what that was, but that might need to be added somewhere in the list of what audit does.
Okay, so in terms of the head of internal audits view on impairments, Alistair.
Thank you, Chair. Yep, so in the internal auditing standards, it is a requirement on me to declare if there's any impairments on me. And what you do see in some local authorities is that the head of audit could also be responsible for overseeing risk. And obviously that would mean that they couldn't necessarily be independent or objective in doing audits around risk management, etc. But the way you're set up in Somerset Council, there is no impairment because we have no additional responsibilities. So being part of SWAP, it makes sure that we are independent and objective in our role.
So my only question is that captured somewhere like the minutes today, just so we know we've asked the question and acknowledged that?
Yeah. Captured in the minutes.
Thank you, great report. The level of detail in it, it was a really good for me refresh and a reminder of what you do as a committee, the level of work that we've been through in the last year, but also really gives a good refresh. And actually, I think for any new members or anybody sits on audit, it'd be really helpful for them to read, because it's a bit of a catch-all of what we've done, what we plan to do, and what we're guided by. Thank you, Chair.
Any other comments, Jason?
Just a quick one. I'd love to take all the glory on this one, man. Didn't say I wrote it all, but thankfully it's called management by delegation. Alistair wrote the majority of this, and I think it really is a good report. I think for council, I think it's a helpful report. Yeah, this is the audit committee's report, although we've wrote it, it is your report, so you need to own it. But I think it's a really good report. When you look at the appendices, I think they're really set out as well. The bits we know we're good at, the bits where we've got some improvements, etc., etc. And so there's a couple of areas that's highlighted for development. We'll pick those up in the forward plan going forward. They're fairly easy to sort out, actually. There's no fundamental issues. So I think it's a very positive report. The other thing I would say is when you reflect back on the year, which this is referring to, it's been a fairly busy year. And I'd personally like to thank all the audit committee members for all their hard work in signing off the 9 sets of accounts we've got through in the last year, because I know it's not been easy.
Yeah, so you know, I've said it many times to you already, and you will have my undying thanks for the workload that the committee's got through over the last 12 months, but also the spirit in which we've got there, because I think audit committee's always been a positive place. We don't descend into partisan tribes. We try and focus on the whole organisation, not necessarily on party politics. So I think that's where audit comes into its own, really. And the fact that we have got that wider remit, each of these scrutiny committees has obviously got its own area of responsibility, and they can deep dive into that. But actually having somewhere you can bring everything together is really helpful. So thank you. If there are no other suggested amendments or comments on the report, I'm going to move on, if that's okay. Yeah. Happy?
Chairperson,
Who said that?
it's Lindy.
Oh, hello, Lindy.
Sorry, I don't know why there was a delay in me joining the meeting. So it seems like I've missed again a little part of what was being discussed. I just have one question on the annual report of the Audit Committee. According to the guidance on IAS Plus, it says that you need to disclose how the Audit Committee composition requirements have been addressed and the name and qualifications of all members of the Audit Committee during the period, if not provided elsewhere. So I'm not sure if it's maybe elsewhere in the report, but I didn't see the qualifications of the Audit Committee members. Thank you.
Alistair, is that something that you can pick up?
I do apologise, I couldn't quite hear all the question that was asked, but in terms of adding qualifications of the audit committee, we can certainly look at adding that into this report before it goes on to full council.
Thank you. Andy?
I suppose my issue with that is qualifications or experience. You know, if you've worked in an audit committee environment for 5-10 years, not a qualification, but for me that's valid and is experience. I suppose it's balancing that commentary, isn't it?
Jason?
Yeah, we can pick that up. I think in terms of audit committees on councils, by their nature, they'd be made up of councillors. That's why we also supplement that with independent members. That's why Lindy's part of the committee. As you know, we did try and recruit 2. We only have 1 suitable candidate. That'll be something we revisit. But I'll take Mandy's point as well in terms of that wider piece. Is I think one of the qualities we're looking from councillors, if this was full of lots of accountants, I mean, it'd be a jolly good, exciting lunch and party, but actually we might miss loads of things. It's the skills, a range of skills that all the members bring. And as Mandy said, I think one of the key things is that inquiring mind and asking questions, a bit like was demonstrated when we talked about risks a minute ago. It's that type of stuff that actually makes a really good audit committee as well. So the qualifications, yeah, that's part of it, but it's not the only thing. We'll pick that up for the final report for council and amend that to make sure we cover that off.
So are members happy to accept the changes that have been recommended in the meeting and then for that to be proposed to full council? Can I have a formal proposer? Simon, formal seconder, Tim, all those in favour? Yeah. Any abstentions? Everyone happy? Perfect. Thank you very much. Okay. Welcome to Duncan and to Louise. Yeah. Very pleased to be able to welcome you to Audit Committee today. So you're going to give us an overview of the Transformation Risk Report, is that right? Yep. Over to you.
Thanks, Duncan. So yeah, there's a report regarding the improvement and transformation risks, and today's an opportunity for the Audit Committee to consider the risks associated with the programme. There's also what we'd like is to seek Audit Committee's view on the risks and the mitigations associated with those risks. The intention is to continue to review the programme risks with Audit Committee and seek feedback. So this is the first opportunity that you've seen the risk register at Audit Committee, and we do intend to come back on a regular basis. There are 19 risks within the risk register at the moment, and these are continually reviewed. I just wanted to note that the risk 3, appreciate it, they're not actually numbered in the report, but it's risk 3, and that's the insufficient budget to fund redundancies. That is RAG rated 20 within the report. However, we have subsequently reviewed the risk register, and it's now the mitigation score has now been reduced to 12. Initially, the reason for the RAG rating of 20 was because we'd not actually received the capitalisation directive and the forecast for capital receipts. So subsequently discussed this with Jason and Nikki regarding that mitigation, and that's why we've reduced it, because a council has never been refused a capitalisation directive. So actually the main reason for us scoring it 20 was based on a refusal, and because we know it won't be refused, or that a council has never had it refused, we'd reduce that to 12. There's also that there is a forecast of capital receipts from the disposal of assets, including commercial properties, that are actively managed through the Property Investment Executive Subcommittee and Asset Management Group. And also there is a strategy in place for disposal of assets to generate capital receipts that could be used via flexible use of capital receipts policy. And lastly, there's £14 million in the bank of capital receipts at present to cover the first batch of voluntary redundancies. So it's just noting that has been reduced. So all of the 19 risks now, the mitigating scores, are either amber or green. And the next steps in terms of risk management of risks for the programme is that we will be incorporating our risks onto Infogen and Pentana. I think you had a report about that earlier this morning. So we'll be aligning our risk approach with the corporate approach being adopted for the programme. I think we were intending to week commencing the 3rd, but I think we're a bit ambitious trying to get onto Pentana and Ideagen the week commencing the 3rd of June. But we've started engagement with the risk team, and the risk manager for the programme is also engaged with the risk team. So we'll be aligning corporately the programme risk with the corporate approach. But as I just mentioned to start with, it's really for us to just seek an opportunity to seek feedback on the risks, and if there's anything that you think's missing, that this is being considered by officers. We asked the same question as scrutiny yesterday as well. If there's anything else that you think we should be highlighting as risks on that register. Duncan, I don't know if you wanted to add anything.
Nothing significant, just say this is quite dynamic. So I think next time you see this, which won't be next couple of weeks, but probably next couple of months, at least one, if not two of these will probably be closed. So things like the voluntary redundancy, value for money not evidence, well, obviously as we've finalised and validated the figures there, we can see the payback period. So some of those risks we will move past by the time you see it, but obviously new things will drop onto the register as the programme develops and we get into implementation stage. So I think you will see this is quite a dynamic document rather than a static document where it's the same risks and it's just about a bit of mitigation in different ways. But it might be slightly different from the council-wide strategic risks.
Okay. Open the floor up to members then. So Quill.
Thank you, Mr. Chairman. Yeah, thank you for clarifying the capitalisation direction, because I have to say I thought it was a done deal, and I read this and I thought, ooh, it's all gone a bit pear-shaped. And you then went on to say that the reason for the level of confidence is because one's never been refused before. However, of course, if we do understand that the granting of this thing is contingent on this council delivering a series of actions. So in a way, that is where the risk lies, whether we're, it's whether we can convince DLUC that we've actually done what we need to do. And of course, we're now into an election campaign, and I don't know how that is likely to influence or affect any decisions. I mean, particularly if there's a change of government, there will be a period of time of embedding new people in. But I don't know whether you have a sense of whether business will just carry on, continue, or whether any new government might have a different view. So I'd be interested in your thoughts on that. There's also a risk about workforce, what I call a sort of attrition, that and the redundancy scheme, the compulsory one when and if it comes, and the voluntary ones are all based around people who are deemed to be at risk. However, there seems to be an emerging picture that people in areas that are not deemed to be at risk are leaving anyway. And so we're starting to develop skilled holes. And I don't think that this, again, I'd be welcoming your perspective on that. I don't think that this necessarily adequately covers what's going to happen. And the problem is, with you're dealing with staff matters, you can't predict what people are going to do, but at least you have to have some idea of what you're going to do if they do it. And so I'd like a little bit more clarity on that. Particularly as we will be losing, this is the main point, a lot of experience and talent. There's a risk in here about how we manage to capture people, knowledge management, which of course is no good the day after they've left. And I always held the view that actually once you leave a job, you're probably still valuable to that organisation for possibly 6 months, depending on what you've been doing. After that, the organisation's moved on. But I wonder, is there any way that we can put up some sort of system to at least keep open contact with people who leave so that they can be called up? So somebody says, what's this, or what do we do here? I remember the classic example I was given was in a water company, or actually was in the Environment Agency in the middle of England, where this guy retired on the Friday and he went back into the office on the Monday to say goodbye to his colleagues. And there was an absolute flat panic because there's a pollution incident in a stream and they didn't know where it was. And he said, oh, that'll be the old dye works up there. And, it's this kind of stuff is very difficult to capture. So it is, to my mind, very important that you keep at least some kind of, use the word hold, that doesn't sound right. To keep contact with this level of knowledge in the organisation, particularly as we're looking at such a large reduction in staff. And and that's something we need to lose. I've also written down Moscow here, which I think was an acronym.
Let's get Duncan to answer the other questions first, and then you can come back to Moscow after that.
I can't find Moscow, so is it watching? Anyway, thank you. Did that make all? That was a bit of a ramble, but did it make sense?
I think it did. Thank you, Councillor. And if you're happy, Chair, I'm going to ask Lou just to talk about Moscow for 2 seconds.
It's yeah, sorry, we put an algorithm, should have changed that, but it's a must do, should do, could do, or would do analysis in terms of prioritising project work or projects. So it's making sure that you're doing the must do. So the main priority is prioritisation.
So if I may, Chair, thank you. So in terms of the more straightforward one, I don't think, and I'll look to Mr. Vaughan as well, but I don't think we're particularly worried about the capitalisation. The things we have to do as part of the capitalisation direction aren't pass fail. They're reviews for government to consider what the capitalisation direction means for the council as an organisation. And really, I see that as about future work. So if we had a sit for review, for example, and it said, oh, there were problems, I think that would be understood because we've asked for the capitalisation to start with. We wouldn't be doing that if everything was tickety-boo. But it's not a case of because there are problems you don't get the capitalisation. It's more the fact government want to know if they need to take additional steps to support the organisation or intervene in the organisation. So I think it's not, we have to do things to get the capitalisation. As far as I'm concerned, the capitalisation has been agreed by government. We're just in the process of waiting for that paperwork to be signed off. I'm not necessarily expecting that pretty much for the settlement at the end of the year. I don't know if Mr. Vaughan would disagree. Yeah, that was a nod.
On that point, does that mean we can start spending the money before we've had the decision?
We've got the capital receipts flexibility policy that we can use as a backstop if that doesn't come through anyway.
Yeah, exactly that. So we should have sufficient flexibility within the way we can spend the capital we have. That won't be an issue until we have to close at the end of the year. If we don't have it by the end of the year, it's an issue because we certainly won't be able to close the account at the end of the year in balance in any way, shape or form without the capitalisation. And I don't think the election particularly will have a big impact on that because if government started to change capitalisation directions for the organisations they've agreed already, then 19 councils are going to be in major problems. And the only way out of that will be to go to government and ask for a capitalisation direction. So it's very, very unlikely, I think, that process for this year is at risk. Obviously, future years we still need to work through. In terms of the point about motivation and people leaving the organisation outside of the programme, if that makes sense, yes, we do have that. There's a regular churn. There's a skill shortage across the whole of local government for qualified colleagues in a number of areas. Talking to Director of Children's Services recently, we're the equivalent of, I think, nearly 2 whole social work pods teams down, just in terms of recruiting and retaining people. And it's a very competitive market in the Southwest. So that is happening. It's not as a result of a programme, so it's not necessarily reflected in the risk management of the programme in terms of a mitigation, but it is going to be reflected and already is reflected in strategic risk of the council. So we try and pick it up there, but the programme may exacerbate that problem, because obviously people don't like uncertainty as a rule. So therefore we may see people making decisions that aren't within the programme, but because they know the programme's happening elsewhere, which I think is what you're alluding to. In terms of the final point, yes, we have developed a knowledge retention and transfer toolkit, which is a very grand title. But basically it's a process to work through. It's just mentioned on page 175 as part of mitigation. But if members want to see that separate, they're happy to share it. What that toolkit is basically a way of working through with colleagues who are staying in the organisation and people who are leaving to understand what the key contacts are, what the networks are we need to know about, any key points. As part of that, there is that conversation. We can't quite draft people. I've always liked the American military view of once you've left the army, you're still in it for the reserves for a couple of years, just in case. We're not quite in that position. But to be fair, I think most colleagues are actually parting with the organisation in pretty good terms, at least at this point in time. And therefore, people are very happy to come back and support their old teams and just help out where they've got that relevant knowledge. So, and we still have a number of colleagues who departed the organisation last year who are offering to help out or just know this one thing that will make life easy for people. So we'll keep doing that and we will work quite hard on that. In terms of the organisational knowledge, it will be affected. There'll be fewer people and people who've been posted for a long time not there anymore. What we need to try and make sure is that the systems are actually up to date and capture it, because that information, the risk we have, a lot of that information is with one person, and that's what we need to move away from as an organisation. That's a risk in its own right, if that makes sense. We need to actually start to make sure the ownership of the information is systemised so we can access it, whoever needs it, rather than it be locked up in one person. And that's a piece of work, I think, for all councils.
So that actually brings me on to the question I was going to ask Duncan, which is largely around having been through this through transformation at South Somerset, where the plan was largely to digitise the systems, and the digital infrastructure didn't keep pace with the rest of the changes in the organisation. I didn't see within the risk register here where the technological sort of enablers are to support the transformation. Are they on track? Are they already in place? Are we confident that they can support the organisation into the new future?
So, being very blunt, they're not in this programme. Those digital transformation pieces will be what we use to balance the books in future years. So if you recall, when we set the budget, what we said was a budget that was being set effectively bought us this financial year that we're now in to turn over and try and do the transformation piece. The transformation in this iteration, if I'm being really honest, I think all members have heard me say this before, is mainly cuts. This is about reducing the staffing base to try and close the £80 million one-off resource, the gap effectively we pushed into next financial year. So we're not reliant in this programme on any significant digital transformation, new systems, because being honest, exactly what you saw at South Somerset, you can't turn that around in a year. We don't have the capacity in the organisation. There isn't the system there already. So we actually need to build up towards that. So the digital team are building towards being able to put together a 3-year programme of transformation led by technology, AI. And it's not, we're not doing those things. So there are some pieces of that work already happening. You'll be able to see it in the organisation. But the programme savings are not predicated on delivering that because the timetable wasn't sufficient. So the programme savings for this year are very much about staff reduction. And in a couple of cases, maybe service closure, but very few of those. So, yeah, you're absolutely right. But for that reason, that's the reason it's not in for this year.
You should see that next year for the year after, if that makes sense.
Okay, thanks. Other questions? Mandy?
Thank you very much. I think we had a long talk through in scrutiny about the project yesterday. So I visited yesterday to scrutiny, had some questions. So I suppose the points for me for Audit Committee, and the main point I raised yesterday was, for me, we still have no target operating model. I feel that that really underpins a lot of risk and the work that goes on in the programme. And for me, when I look at the risks and in fact the whole project, it's very understandably inward focusing, but we cannot lose sight of our residents of Somerset, and somehow they've been lost in all the busyness that's going on. So I think we need to ensure that that's there. So my questions relating, because we've been asked to comment on the programme risk. So first of all, we've just agreed that sort of risk matrix we're going to use, and then suddenly we've got blues popping into this risk matrix and we're on red, amber, green. So hopefully the blues will disappear. And my second, and we're looking for consistency, which we discussed in the last paper, which I think will help aid understanding. So my first question really is around the non-delivery of MTFP savings. So we've got there a RAG rating of 15 with a mitigated of 8. So I've read the mitigating factors. So resource planning to ensure adequate levels of resource. That's going to be a challenge as our staff numbers contract. Prioritise projects within the MTFP savings within the involvement and transformation programme. That should happen always, business as usual. Adopt a robust approach to monitoring and forecasting savings. Well, you can have as robust an approach as you like, but it won't save an extra penny. It's actually delivery of, enable early identification of impacted savings and mitigating activity. And I suppose for me, the interesting bit there is the mitigating activity. I suppose given we were over 80 million, probably short of what we needed to balance this year's, and we've balanced it using reserves and flexibilities. So for me, mitigating activity, if there was any mitigating activity and ways to save money, those should have been presented at our budget this year as opposed to taking it from reserves. So my question is, how a lot of that to me is business as normal, and I don't get a sense of how those will mitigate from a 15 to an 8. So that's my first question.
Thank you, Chair. Thank you, Councillor Chilcott. So I think in terms of that one, just be clear, this is the programme risk for the transformation programme. This isn't the risk for the overall MTFP for the council, which I know you appreciate, but just to be clear on that. So in terms of the risk within the programme itself, we obviously have a number of savings which have been assigned to the programme for this financial year for delivery by the 1st of April. And what we're trying to make sure is that we use the programme resource to actually make sure we get into those. When we talk about mitigation, to pick that up first, what we're talking about there is if a saving cannot be delivered the way it was originally intended, okay, we accept things move on, life is different, things might be discovered that weren't known at the time. What are we going to do within the programme or potentially within the service to actually say, okay, well, how can we make that good? Because what we can't afford to do is say, well, we're saving money on the one hand here, but on the other hand, we're not delivering all the things we said we do to start with, and one just cancels out the other. So we need to make sure, and it's been very clear position since the council formed last year, that if you're not delivering savings that have been agreed to, it's incumbent on the team, then the service, then the directorate, then the executive directorate to try and find compensating savings to make up for that. Because what we don't want to do, exactly as you said, is allow that to hit the corporate centre and then start to come out of reserves. Because that means just a different way of spending one-off money to balance the budget, and that's not helping us. So the mitigations that we're talking about in here are very much making sure we've got the right resource in the project team to be able to deliver the programme, because those are the savings that we're committed to. And I think we're just about getting to that level now. We've had a couple of vacancies effectively, or gaps in the resource, but that resource plan is there to make sure we've got the right people in the team to take it forward. What we've done in terms of prioritised projects within MTFP savings, there was a risk the council corporately couldn't resource all of the different savings in different ways.
So we tried to make sure, for example, with the workforce piece and transformation programme we're talking about today, that we have basically tweaked most of the workforce directorate to be able to deliver that on the timetable we set, recognising there will be an impact on the rest of the council. Some of the other savings in the MTFP rely on staff changes in other parts of the council, so we're just having to make sure we time those against each other, so we're not all expecting the same resource at the same time to do 5 different jobs. And that's what we've been trying to talk about when we prioritise the projects. So obviously this is the biggest saving within the programme, so we've made sure we try and get this through earlier. Of course, the earlier we take the saving, the more we make the one-off benefit in year. But we will need to make sure that resource is freed up to cover the other savings that we're committed to where they need that corporate support. So that's what that side means in there. And at this point in time, I can report that we do have the right corporate resource, as far as I'm aware, in place to be able to support the programme. The problem will be, and this is what we're working right now to make sure we can help it, is if the programme slips significantly. We've got a little bit of contingency of slippage. Won't necessarily affect the figures, because the figures obviously from the 1st of April next year. But if the programme slips significantly in terms of delivery, that corporate resource we've teed up for this period of time will then be needed in that period of time when it needs to do something else. And that's where the risk is, which is what we're trying to talk about in that second mitigation. So at this point in time, we're in a good place with that. If in 2 months' time we're well behind programme, that will start to become more of an issue, and that mitigation will no longer be sufficient to give us the confidence to reduce the residual score. And then the final part in there, you're absolutely right, but at this point in time, it is the robust nature of actually challenging why people aren't delivering savings. There is a culture inherited from a number of predecessor organisations that if you didn't deliver savings, that was fine. Mr. Gordon and Corporate Centre always had that magic money tree and they would pay. That doesn't exist. So we've put quite a lot of effort in, and I know Jason's been heavily involved in really robustly starting to monitor and track savings and challenge non-delivery, because what we can't handle is finding out in the last quarter of a year, oh, I didn't get that. Well, that's not helping us. If we need to know something's not working now, bear in mind these are all for the 1st of April. Within this programme, obviously the MTFS has got savings that are due to be delivered in year 4 this year, but we need to know as early as possible. So if we need to put that mitigation action together, we can. But the first line is, well, okay, you say you can't do it, why not? What can you do instead? How can you get this back on track? And if we're not tracking it very carefully, we can't have that conversation in a timely manner. So that's what that mitigation covers. And at this point in time, again, within the transformation programme, we do appear to be on track. So, there is a risk coming up in terms of operational delivery risk. We've got a big piece of data validation to do in the next 6 weeks to validate all the posts in the as-is structure, make sure they're all fully funded and we understand what those posts are, and look at translating that into the new to-be structure. And then we can work out what that implication is. That's a really big piece of data validation work. If that starts to slip, some of these mitigations won't be strong enough anymore and the risk will go back up.
Thank you. And I think savings, delivery of savings and percentage of savings is probably something that slipped slightly last year, and certainly the scrutiny reports had very little around mitigating actions when budgets were not as they should be. So I think if that's strengthened, that's helpful right across the organisation. My second question, I'll roll the third into it if you like. So page 172, insufficient budget to fund redundancies. Calculation, I think I heard you say yesterday, and I was scribbling down at home, that we have 40 million in the bank from capital receipts. You said that figure yesterday. So if that's the case, why have we still got a 20 on the insufficient budget to fund redundancies? And do we actually know how much we've raised from the sale of assets today? I only asked that, it's just that reassurance that with that delay in everything coming through and confirmation from government, we've still got the money to carry on with the redundancies and payments. And I'll just finish my closing comment before you answer that. So on reading the key programme risks and looking at the mitigated RAG, it reads right across the programme as quite low risk when you look at them in their entirety. And I just cannot believe, given the complexity, scale and pace of the programme, that this is the case. And my other concern with risk generally is that there are interdependencies with these risks. You can get a little bit of something that's not quite here, right here, and another little bit not quite right there. So whilst it might not hit the buttons to show up in an independent risk, I am just concerned really at those interdependencies and where one risk links with another, and it's how that will be captured. Thank you.
Okay. Did you want a response from Liz on that? Yeah.
So yesterday, when I sat on the other side of the room, I do recall talking about asset disposals under two headings. One is the council's own land and property, and the other was the commercial investments. I don't recall using the figure of 40 million at the time. So, okay. So there are two 40 millions. There's the 40 million that is the capitalisation direction amount requested of government, and there is the 40 million savings target. The fact that they're the same figure, I've not found terribly helpful. Yeah, it would have been, it actually would have been easier if they'd been different figures, because I think people have. So apologies if I'm misled in any way, I didn't mean to.
It might be helpful just for the record. So we started the year with just over £14 million of capital receipts in the bank. 1-4, not 40, 14, just to be absolutely clear. We are in the process of a number of the commercial portfolio disposals. I think we'll see somewhere around 25 to 27 million pounds over the next few weeks. There is the programme through the investment subcommittee, and JLL have advised the portfolio around that, how we can look to do that. We're confident we'll hit those sort of targets. There is also the non-commercial asset sales, and the asset management group monitor that on a monthly basis in fine detail. The type of numbers we're talking around there, somewhere around the 25, 27 million pounds sort of figure in the year. So we're confident we will hit the capital receipts figure required to finance this for the coming year.
Thank you. That's probably the first time I've had assurance that there's money there to go ahead with that redundancy programme. I think it'd be really helpful in future papers just to acknowledge that within the financial element of the paper, so people know we are continuing, but there is money there to fund it. I think that'd be really helpful. And just to you, Duncan, it's just that interdependencies really and how you capture that.
Yeah, no, I absolutely agree. And one of the things that we've talked about in Design Authority is actually, do we theme the risks? Because quite a lot of these risks are quite similar, and that interdependency is a big issue. So we've got 19 now. I'm thinking we may well be better off having half a dozen themes, which might have 2 or 3 risks in each as we move them around. But as I said earlier, this is going to be quite dynamic. And in 2 months' time, if something slipped or we've had a delay, some of these risks could be quite different. So we'll keep working on that. But I think that interdependency piece is quite important because there is some clear overlap in here, and it's not easy in the current way we've laid it out to see how that will be reflected. So we'll reflect on that.
Any sort of final questions here? Oh, sorry, Tim, I forgot you.
Thank you, Chair. I'll finish off with, I think, what will be a silly question. I think if I've either forgotten the answer to this or I've misinterpreted it somewhere. What is the difference between a blue and a yellow 12?
There's a blue and a yellow 12. It should be an orange 12, not a yellow. So the colour coordinating of that report, apologies, I was looking at, I didn't notice that, and it was submitted after I'd reviewed it, but it will definitely be aligned to the corporate risk register going forward.
You would.
Chair, can I ask that we actually put the RAG ratings in? We can ignore B for blue. Colourblind, so I have to chase round and round to try and find out where we are. But if you actually put RAG in, I'm in with a chance.
Thanks, Simon. That's a good accessibility point there. Duncan, one final question from me then, and that's how much clarity is there amongst the workforce and the staff, not necessarily at the sort of senior leadership level, but lower down the organisation in terms of what the timescales and what the impact on them is going to be, because I'm just really conscious that those people who may be very, very worried about the situation at the moment. It's not fair to leave them dangling for any longer than we need to. We need to give them surety for themselves and their families.
Yeah, so thank you for that, and I absolutely agree with the point. And the sooner we can give clarity, we will. The difficulty we have is, in a lot of cases, we do not know the answers to specific individual questions right now. So the timetable we're working to is in July, and that is July, all of it right now. So still trying to nail the date. We will be coming out with a layer 4-5 and some of layer 6 where we've got that finished. So we'll give that certainty as soon as we can. Anyone not covered in that will be in September. So the target still is, obviously we have to make the savings by the 1st of April for them to be able to be agreed in the budget process, or prior to the budget process if they don't need the budget agreement. So we'll have that in place for next year. In terms of certainty for colleagues, we are trying to focus the savings in areas that won't affect frontline delivery. Obviously, anywhere where we've got demand management, we've got staff to the demand that we have to manage. We can't reduce and say, well, that'll cope. One of the key things that I think is not clear enough for colleagues, and we do need to work hard to get this messaging out. This is not reducing the number of people in the organisation and saying everyone's left's got to pick up the slack. This is saying with reduced numbers we've got, we will have to do things differently. We will have to stop doing some things. We will have to work differently. We'll have to ditch maybe some of the process and bureaucracy that I think we've all seen in the organisation over years, and actually work out how we do things a bit more simply, because it's not going to be okay to just say to a smaller team, please do the same thing in the same way. And that's not what we want to get. But I think that's one of the bigger worries people have got. That's going to be about strength of management all the way through the organisation to help people translate into that new culture and structure. So that needs to come out as well by September to people, because we go to a new structure, but we all work the way we work now. It's not going to work. And that picks up Councillor Shilcott's point about the operating model, which is being worked on, just to reassure everyone.
Thank you. By my reckoning, that's all of the questioning. So feel free if you want to leave or if you want to stay, you're very welcome. Okay, thank you. Thank you both. All right, moving on to item 12, which is an update on My Life, My Future, the Adult Social Care Transformation Programme. Welcome, Mel and team. Feel free to grab cake on the way past.
Okay, thank you for inviting us here today. We haven't been before Read the Transformation and the My Life, My Future, so I'm hoping what we've got for you today is what you need. If it isn't, we will, we've got a load of slides here, so we will make sure that if we need to jump in and out, we can. And listening to your last comments, we'll make sure we put the red in words and green on these for the future so that you can actually see them if you're colourblind. A really good spot, so thank you for that. So where we are is, obviously we've given you a report and some documents to go with it, which I'm assuming that you have had a chance to have a look at and read. I think from our point of view, where we are at the moment is we are on track to deliver our high scenario. However, as always, we're monitoring this on a daily basis or a fortnightly basis just to check where we are. And the numbers will change during the year based on that, because it's a cumulative effect of us delivering and people leaving the service. So if we have less people coming in to particular areas, so for example, if we have less people coming into residential care, which is what we're trying to do, sometimes there's a lag because people leave that setting or don't need that setting any further or die. And sometimes there's a slight lag. So we monitor both those coming in and those leaving or dying from our services, which sometimes has a lag, but we manage that. What you can see so far is that our teams are now completing 30 to 40% more work, meaning that we are assessing more people. So you will know, and we've talked through a lot of the time around productivity and how productivity needs to change in the way that we deliver. And you talked just before around different systems and processes, and we have really looked at the processes that we have in place currently to make that a lot more simple for our staff. And a lot of work that we've done with Newton around that productivity. How do we work? How do we do it better? How do we work with people quicker and prevent that crisis? And we've got a lot of work in that space. We've seen about 21% decrease in the average change of community-based support package, meaning that people are maintaining their independence a lot more. So we're making sure we're using our communities, we're using people to actually do that. We've got almost 20% more people being successfully re-abled. That's great. So that early intervention to stop people going into hospital, but more importantly, it's when people leave hospitals, we are enabling them to re-able them really well. We continue to need to improve upon that, but you're starting to see that coming through. And young people into transition for the first time, we're now on an average assessing people before they're 18. And that's the first time we've done that for many, many years. We need to get it to 17, we need to get it 16, but we're getting that earlier. And that is because of that better planning, making about a 500 a week reduction in those required support packages when they're coming over. I think we'll get even more as we get better at doing that and modelling in the right way. We've also formed, as you're already aware, I'm sure, our learning disability teams. And those peer forums have now increased. Those specialist teams are meaning that actually we can look at people very differently and work that through. So again, it's about reviewing the quality and the outcomes. And the average cost in that area, we know, has started to go down, will continue to go down. It's a longer lag time for people with a learning disability. Moving somebody with a learning disability and their families and getting the family to support to do that into a better environment takes a little bit longer. But again, we're working that through. So we also know that for 24-25, we haven't put in that progression model of progression and enablement into that work stream yet. So I think we will see an increased opportunities in that area, probably going through for 24-25. So you'll see in our rounds going forward, some more savings coming in at that point, but only when we're really clear about that. Whilst we've seen a slight increase in the overall residential starts, and you'll see that from our baseline period. So our baseline period was last year when we looked at how we do this, what do we like in there, and we have seen a slight increase in that, very small, but that's because of our productivity and 30% more people in our neighbourhoods and our HIS teams are in the last 4 months. So we've seen, because we've got the backlog, you've seen more people come through. We're working harder with people and looking at different ways of doing it. You've seen a slight increase, but it is tiny compared to what we were. And we know in that in the past 6 weeks, approximately 11 more people have stayed at home over that 6 weeks period. So we are doing this down to individual people so that we can monitor, because our budget is all made up of individuals. So the whole budget is mainly people. The less people we can get in that direction, the better we can. So the best we can do. And that looks like about 95 people per year are able to remain at home rather than going into residential care. The cost of that is good. That's what we're trying to achieve. Shall I hand over? Or do you want to? Shall I stop at that point and ask you for any questions you want? And if there's any lots of detail, I'll be passing just across the
Members, questions? Mandy?
Predictable, Chair. Thank you. Lots of reading there, lots of programme-ish dialogue throughout, actually. But yeah, helpful background. So my first question is, why are we still in the position so far into the programme whereby we're saying overall the programme is on track to deliver financial benefits between the low and the high? So I think that's a fairly broad range, and I'm just wondering why at this stage in the programme we're not starting to hone down a bit more into it. I have got some other questions on the figures, but I'll leave you with that one to start with.
Which page number are you on, Mandy?
179. It's mentioned in several places, but it just says that the programme is looking to deliver on track to deliver the financial benefits between the low and the high scenarios.
The way we track the programme, so we've done for every individual kind of indicator that we're looking at, we've got a baseline period in, I think it was 6 months over 2023. We then track week by week how our performance in each of those indicators is doing. So that is giving us a range because we are tracking relatively frequently. We see those things move week to week. We know for the financial year 2023-24, we're confident that that's now kind of fixed where we've ended up at the end of that period, because we know there are still things changing week to week for how we're going to forecast the next year. We're keeping that kind of range as to where we're going to land because we still think that things will improve from where we are now. When we're doing our forecasting, we're just saying, if we held today's performance indefinitely, where will that get us? So that, I think it's the 7 million number you'll see at the end of 24-25. That says if we stayed where we were today, that's where we'll land. We think there's more work to do that can go up, but we don't want to be overly optimistic or overly forecasting. So everything we're doing says where we're at today, if we kept doing that indefinitely, how much savings will this bring, even though we know there's more to go at. I suppose the alternative is we try and do a kind of where do we think we'll get to, but because that's I guess forecasting stuff that hasn't happened yet. We haven't wanted to ever be reporting like that. We've wanted to be reporting on, if we stayed where we were today forwards, where will that get us, knowing there's more work to do. So if anything, it's probably a conservative number, but we don't want to build in any kind of optimism bias of saying, yeah, we've got all these things in the plan and we'll end up miles better. We're kind of forecasting from today's performance forward. Does that help answer the question?
Yeah, thanks. I sort of would expect with a programme, and it is a complex programme, to have sort of on track, ahead of track from where you are in the programme. I would have expected to probably have had that laid out so you can really easily highlight the areas that you're exceeding your expectations on, and those probably where you're falling short. I move on to the risks and key risks and issues, which we've got on page 211. Just to say, we've had a lovely long paper on risks today, and this doesn't probably fit with the layout that we're going to be expecting to see. So it's that reassurance that that's going to be brought in line so our risk and the reporting of it is consistent. And I'm getting a nodding of the head, so that's great. So if I can shoot to page 215, and I'll just bring it up in front of me. Oh, I've got the right page, which should have the figures on it if I've got the right page. Oh, if I failed, I'll talk about it. So it's the page with all the figures on 8, basically. So we're saying, my understanding is the cost is 7.5 million. I think that was originally stated. And if we look at the multiplier, that gets to about your 10 million. And then on another page, 182, it says on those figures, oh, that's the page, I want 182. Let's go back to that. I was bouncing around the paper trying to cross-reference figures. Right, so on page 182, we've got all the figures there, which was the bit I was sort of focusing on. Can you just talk me through the, I was looking at the last boxes, which is the need glasses, projected total MTFP contributions by 24-25. And when that came down to the bottom, it came to 6.5 to 7.5. And then we've got our original target. So is that the total savings you're looking to make? I couldn't quite get a sense of the figures and the tables. Can you talk me through that?
Yeah. So the kind of left-hand two columns, one that say original overall target and annual value.
Yeah.
That's the full annualized value of the work we're doing, because all of the work we're doing is pretty much around managing demand into certain services, whether that's residential care, supported living, whatever it might be. They have a profile of savings. If we avoid someone going into residential care today, we won't see the full benefit of that for 61 weeks, because that's how long an average duration of a placement is. So although we know operationally we've avoided that residential start, we don't kind of bank the full cash from that till over a year's time. So the left-hand two columns are when we have accrued all of the value of the changes we've made, that's where we'll be. The two columns on the right-hand side are almost that if we cut off the value at March 24 and if we cut off the value at the end of March 25, how much will we have had?
Right, so
does that help?
I sort of think so, and I didn't really get a sense from that sort of as it's presented. So my question is, originally within the planning, it was 5 million year one, 5 million year two. So what I can't get now is year one and year two have moved forward. I just haven't captured the sense of how much this year, how much next year is some following into the following year.
So 1 million we have banked this year, so that's slightly over what we expected. So last year, thank you. So 23,
yeah, 24,
we have done 1 million. That's in that year. We have taken out of the base budget already 10 million for this programme over the 2 years, over the years. So my expectation is that this year we get to 9 million. Overall 10, 1 from last year and 9 from it. At the moment, this is looking at about between 6.8 and 7.5. That is saying that's if we did nothing else now, that's where we'd get to. Obviously, we've got programmes of change happening all along. It is also predicated on, and as you've said, so let's say, so somebody will stay in a residential setting for about 61 weeks before they let's be blunt, before they die. That's probably about the length of stay, the average length of stay in a residential or nursing setting for somebody, a bit less in a nursing setting. That's great because that means people have stayed in their home as long as possible and only gone somewhere to have their end of their life. That's the reality of what we're trying to do here. If that's the case, then we stop somebody coming in. We then have to wait 62 weeks possibly for people to die, unless, like this year, we've seen a rise in deaths because we monitor that. Therefore, the number will increase. So we manage that constantly, and that's what we're looking at. So when you're talking about what do you then see at the end of the year, there will be a little bit of a flux in that, dependent on where we get to. But that's not the only thing that we look for. So we've got other programmes of change in there. So the other ones that you've got in there are around reablement, where we've got a fixed. What we do in reablement is say, okay, people come into the service, we're trying to reduce the amount of ongoing care they require. And therefore, again, that's not a lag on that. That's just the norm that we see. We can record that in that way.
The only thing I'd add, the two bottom two work streams, so on the table there, learning disability progression and preparing for adulthood, those are looking at our cohort of adults with a learning disability. The duration of their packages is much longer, so they take much longer than that 61 weeks to kind of accrue the full value. So we typically see our value come through quicker when we're impacting older adults than we see it in our learning disabilities cohort.
Chair, I've got 2 more questions. Do you want me to carry on? I don't know if there's anybody else that we.
Yeah, okay.
I'll roll them together, shall I?
Roll them together, and then we'll just try and keep things focused.
Thank you. So throughout the papers, you state that savings will be achieved if performance is sustained. I think that'll be a challenge with the council's challenges that it itself faces in the next year. And my understanding was from back along that there'd been a Newton team in to sort of support this work and get it going. So my question is, do you think that will be sustained when the Newton team are no longer in place? Because there will be a capacity issue. And my last question, why on earth was Georgia receiving 2 members of staff? I read that case study, which is in the papers. She had 2 staff, 24 hours a day, and now we're looking, hopefully, she might get a part-time job and transition into independent living. I'm just really concerned at the dynamics of going from that to that, and why was that particular case never looked at previously? I found it concerning to read, really.
So let's start with the case, because that's the easy bit for me. So sometimes when you come through transition, so you come from being a child to an adult, they have a different you will see that some of the children are supported far greater than we do when they're an adult, which is a real problem for families. But that's the case. And that's why if we get in earlier, perhaps those costs at that end could be reduced slightly differently. There's also slightly different law in place. And sometimes the courts will say this is what you have to do. Whereas when they become an adult, we don't have to do that, which is always a good thing. So what we try and do always is progress somebody. The other thing is if sometimes people need a lot of support through transition and you need to do that. Perhaps they're leaving home, perhaps they're in a different place. So you tend to put quite a bit of support in at the beginning to then reduce that. So there'll be lots of cases where we are looking at people and reducing that support dramatically as things go forward.
I find that concerning. It would have been nice to see that step.
We will do it as a step. We're not going to suddenly say, right, you started on 2 and now tomorrow you're 18 and you're going to go down to 1. But we have that progressive model of support and we're really clear about how that has to work. Because actually what we want people to be as independent as possible and have the best life and the best chances in life. And sometimes that may take us 6 months to get to there. And that's what you were describing. It's not going to happen overnight. Please don't say somebody's got X amount of care then and the next day they've not. But, okay, all right, we'll make sure. But we absolutely try to work with those individuals to get them the right support going forward. So that was that one.
And there was capacity post.
So when Newton leaves, so what we're doing at the moment is we're really working to make sure this is business as usual. So our data that we've collected and the way in which we're doing our data, we're making sure that the people are owning this and slowly we're sort of we're transferring it at the moment, saying actually this is your role now, this is what your role's got to be for the future, this is how you work. And that's what we've been doing all the way through this process. We've hand-holding and slowly you reduce the hand-holding. Newton are not just disappearing tomorrow. So when they go, I can still pull them back if things aren't quite working or if things aren't quite the way they want to be or get that advice. That's the beauty of having Newton with us, is about how do I know talking to other colleagues that actually something perhaps didn't go quite right and they rang them and said, can you come back in and just have a look at this for me? Not at additional cost, but actually, can you have a look at that? That's how it works. But we are making this business as usual because it is people's roles to do that. And the reorganisation shouldn't affect this because most of this is our frontline staff delivering. And as you've already heard, we're not looking at changing our social workers, changing our adult social care practitioners as part of that transformation. It is a demand-led services. We can't quite meet the demand we've got. We can't quite get the staff. It's not so that area, hopefully we will reduce the risk in that area as much as we can. But you're right, it is a risk that when you leave us, do we keep going and do we get it right? And I think it's about embedding that now.
The only thing I'd add to that, so for each of the work streams, we right at the start set up an operational work stream sponsor and a commissioning work stream sponsor. So each one of them has got 2 really key links into the service who've been involved the whole way through and are going to be the kind of lead people to making sure that this does become business as usual. So there's names in the frame in your service.
And they've been there all along. So those names have been there all along. They've learned how to do this as we've gone. And that's what the importance is, that this is embedded into how we work going forward.
Thank you, Chair.
Right, folks. Thanks, Mel and Emily, for giving this update. Is there anything else that members want to ask before I let Mel and Emily have their slice of cake and be on their way? No, thank you. Thank you for coming along. Okay. Thanks, Duncan. Thanks, Louise. Right, so moving on to item 13, which is the contract management update. Now, we've got 2 choices. We've got about 4 more substantive items on the agenda. We can have a break for lunch now, or we can try and push through. Does anyone feel like they need a break, or do you want to push on? Okay. We can do. I was just trying to see if we can push through, then we can finish earlier, and then you can have the rest of the day to do what you like. But if you want a break, we'll take a break. Let's go 20 minutes until 12:30, and then we'll push through and finish the agenda. Okay.
Thank you for inviting me today. I've got a report on contract management, and it covers 3 external reviews that have been undertaken of contract management. So we've had a review by SWAP, but we've also had 2 reviews for the Department for Levelling Up Housing and Communities, one of which was procurement improvement planning support, and the other one was contract management pioneer program. And the general findings of the 3 reviews is that category management and commissioning needs to improve within the council, and contract management itself across the council needs to improve. We've got a small team in the centre that provides support to contract management, and contract management is decentralised out to services. So the small team I lead of 4 supports that work across the council. We've been able to move forward with some actions. Some the delivery of is dependent on the restructure. So without the restructure, putting a new board in place and determining the senior responsible officer, it's effectively on hold. But we have delivered quite a bit of work. So the successful delivery at the moment has been increased engagement with contract managers across the organisation and service managers. That's enabled tiering of contracts. And tiering is a term we use for looking at the risk and value of contracts, and then putting them in order so we know our highest risk, highest value contracts and can concentrate on those. That work's been undertaken. We've moved to a single contract register through that as well. So we've combined all the contract registers into one. And we have established spend control board. So although we haven't got effectively a strategic board at the moment, we've got a spend control board that's running a couple of times a week and looking at all new contract placements, extensions of contracts and new contracts. And we've got documentation built and ready for the new SRO when they come into post. And we've been preparing for the new Procurement Act in parallel with that. So the timing of us developing our documentation is quite good. We need to change it anyway for the new Procurement Act that's coming in from October. And we've been building a new contract management system. So that's an extension of our current procurement system. So we're not changing systems, we're just putting an extra module on. So we'll have one system where we can keep all of our contracts and changes to contracts. So there's quite a lot of activity at the moment. We're also bringing in a new system to look at social value and the delivery of social value. So we're bringing in a loop system, which will allow all the social value commitments to be loaded to one system, tracked, the value of them then captured. So there's although some elements of contract management and some of the actions we haven't been able to deliver, we are making significant progress on some of the other actions within those 3 reports.
Okay, thanks, Gary. Any questions from members? Andy?
Thank you very much, and thank you for the report. I'm really pleased to hear that there's a single contract register. I know that was part of the joining together of the councils, and I think that started well ahead of pre-vesting day. So it's good that that's together. And I'd be really interested to see whether the overlay and mapping is putting in particular areas of pressure where you might have several very large contracts all needing work on at once. So I'd be really interested to see how that piece of work is going. Really welcome the fact that a social value will be recorded, monitored and reported via the new system Loop. I think for me, it's what actions we take when the social values agreed to are not delivered. I think as a council, we need to be chasing that. But question is, page 253, can we be assured that the list of contract managers in the contract register is now up to date? And when was it last checked? I think that should be done every 3 months. Do you want me to shoot through all of them, Chair, or do one at a time? So the second question was, you're talking about 3 sessions by the end of September, training-wise, should have been delivered. So how many have been delivered and how many of the staff that needed to attend it have attended? My next question is around page 254. Do you plan to rerun the survey? There's a survey there about contracts and training. And I'm just wondering, as part of the swap work, whether that will be rerun at some time. My last question is, have we got no, I'll stop there actually. I can leave that one.
So the first point on the number of contract managers and getting that list correct, that's been a big priority for the team. We've gone through that now, so I think that information is as good as it can be. We are working with people being appointed to roles and leaving roles at the moment due to the transition. So one contract manager was appointed in the post this week. I've contacted them and they've already undertaken the foundation training. So we're keeping an eye on it, but it's like you say, it's not something that's fixed. We need to keep on top of it because of all the changes through the organisation at the moment, but we're aware of that and we're on top of that. In terms of the briefing sessions, I've talked to services, I've got capital managers agreed. I've not delivered any of those sessions yet, but I have spoken individually to each one of the managers managing a contract with a value over £2.5 million. So, and check where they are with their training. So that has led to some other conversations and some team bookings. So, but those three will definitely be booked by September. Those three sessions will happen, those lunch and learns, but none have been delivered yet. So I've had individual conversations, but none of those have happened yet. And the training rerun of the numbers. The training numbers come from government. They come from Government Commercial College rather than through the Learning Centre. So we do have to go back and ask for those numbers every 2 or 3 months. I know that we've got more through the training than are actually listed in the report I've given you, simply because when I talk to the contract managers managing the higher value contracts, some of them have sent me their certificates, but that hasn't yet fed through Government Commercial College. So I'll go back and rerun those numbers, and I'm happy to share that once that comes through. But again, it'll be moving numbers. We may have less contract managers in total and more that have completed the training. It's going to be something we have to keep an eye on and monitor and work on over the next 12 months at least, I would think.
So thank you, Chair. I mean, I'm really concerned that any manager should be managing contracts without the necessary training. I think there's also a level of concern. It's the managing of the contract itself, monitoring the outcomes. You know, this is public money and public funds. So, you know, I really would like some assurance that that is happening. You know, if they're not delivering on an area of contract, you know, what are we doing about it? I think as an audit committee moving forward, it might be nice to get some reassurance around how that's going, especially with a changeover of staff. Thank you.
Gary, would you be able to update us on that point specifically?
Yeah, I think it would be useful if I could put in a recommendation, maybe that training became mandatory again across the organisation.
I think for contract managers, the contract management training should be mandatory. I don't think
going back along it was, so I don't quite
I don't think there'd be any dissent from the committee.
No, I'm really happy to recommend that.
So
yeah,
I think we'd all be happy to recommend that. Yeah.
We actually put a
recommendation. Could we put a formal recommendation?
I think that
yeah, okay. So I'm going to propose that any contract manager within the organisation has to undergo the organisation's contract management training within 6 months of taking up the post. Yeah. 3 months? 3 months, right. That's my proposal.
Just clarify on that one, the question of the 3 months. We don't want to set a target that's not attainable. The training period, we've got 2 organisations offering training. So there's a potential for a gap in between the 2 organisations. You've got the government and our e-learning, is that right? Yeah. So they could be registered in neither or one or the other. And what happens to the people that drop through hole in the middle between the two training organisations? And also, is 3 months a sensible, a realistic time, or does the course take longer than that, or is it, I don't know. Sorry, I don't, with respect, I don't know the length of the course.
Some contract manager, like I say, one contract manager that started first thing this week or maybe last week has already completed the training, so it can be done. Yeah.
Was my formal proposal. Mandy's formally seconded. So is this
Just going to wonder if there was ever likely to be a risk that someone would be running a contract, if they're appointed to a post, whether they'd be running a contract before they have the training.
I think that's,
can we eliminate that? I don't know.
well, I think that's why we said that they need to do it within the 3 months of taking up the post, Gwyl, although it's not ideal that people will be running contracts without having completed the training. We can at least limit the scope of the risk by putting in the training. I think, given that there are going to be lots of gaps appearing across the organisation, the management team's probably going to have to potentially move people into roles that they never necessarily expected to be in. So to say that they have to have done the training before they start the role might be a little bit restrictive, but no, I get the point.
I mean, I think if people are being moved into roles and they're expected to take up contract management on day one, which is quite likely to happen, then I would suggest that they're going to need some sort of support from an experienced contract manager somewhere along the line, some sort of buddying arrangement, someone they could talk to before they get the formal training, because it can be quite daunting.
I don't know if the organisation's considered that, Gary.
It is being done with some of the higher risk, higher value contracts, but only the top kind of goal, just because we haven't got the resource to do.
I mean, the other option is we say that it's compulsory before you'd manage a tier 1 contract, but it has to be done within 3 months for a tier 2, or is there a tier 3? The tier 3 as well, or is it just tier 1 and 2?
I think one of the things we've got some quite experienced contract managers that come in from, say, the private sector and get employed by the organisation, or are managing, say, insurance, which comes in as a contract. So I think immediately may cause issues within the organisation. I think the 3-month window will give me enough leverage to say this is mandatory, we need to do it. And then now that we know that the people that are the contract managers, because we've done the work to identify them, we can keep on top of it then.
So I think we've got a clear steer then 3 months seems reasonable. Got a formally proposed and seconded recommendation. All those in favour? Your hands. Okay, so
thank you.
Thank you. So just looking at page 254, which is the survey results on 254 of the document, I was really disturbed probably reading some of that. 21% of were not sure if there were consequences for failing to meet performance targets. 21% were not sure if the contract detailed how variations should be managed. These are, to me, basic skill. I've not been a contract manager, but dealing with a variation within a contract, I would think could happen quite often. As situations change and contracts flex, and you might not be doing one bit of the contract and be able to do a bit more in another area. I am concerned that about 1/5 of those surveyed felt they didn't have those skills and knowledge. So my question really is, are you going to rerun the survey? And I think from an audit point of view and SWOT point of view, if those figures have not improved, I would find that a great concern. So are you going to rerun the survey? Because I think, again, as an audit committee, if the results weren't better, I would be really concerned at that. So that's the second question.
Yeah, haven't got that planned at the moment, but yeah, happy to, so we can see the supposed to see the results of where we've got with the training once we've done that.
So I think it's Swap that ran the survey. Is that right, Alistair?
Yeah, I can come in on that. So we do have contract management in as an audit in the 24-25 audit plan. Obviously, there's a high level scope for why it was put in the audit plan, but certainly when we have that detailed scoping meeting, obviously part of the conversation could be around whether we do rerun that survey. I do appreciate if we run it too early, some of those officers we're surveying won't be here potentially in 3-4 months' time. So there is going to be a timing issue of when it's best to run that survey to get a good understanding. But we can certainly make sure we include it in the scope.
I think it's certainly what 6-12 months. Is that sort of right time frame? This time
by next March, our organisation should sort of be in place, so it might fit that.
Yeah, so sort of March, April. So reporting back hopefully this time next year, so we can see. Yeah.
And my last question, Chair, is there's quite a bit of guidance and trainings for councillors on procurement and contract management, which I don't think anybody in the organisation's done. And actually it covers how, as councillors, you can challenge contracts and get involved in, you know, how perhaps a particular contract sort of become involved in looking at that early stages before the contract's let. And I just think as a council moving forwards, it'd be quite good for councillors to have a better understanding of that and start to provide some challenge, certainly on the larger contracts. And I'll park that there.
Waste being a case in point. But there we go. Right. Thank you, Gary, so much for coming along to give us that briefing. It has been very helpful. Oh, sorry, Will, did you have a question?
Yes.
Oh, I'm Lindy. Sorry, I missed you.
Yeah, I'm just interested.
Lindy, sorry, I'll just bring Will in the room and then I'll bring you in next, okay?
Okay, thank you. I'm just interested in Appendix 1 and the control boards. A lot has been put on the success of the control boards in bringing down expenditure, but if I read the table right, it saved about £27,000, and only 2 requests have been declined. And bearing in mind that these must be populated by fairly high level people and the level of preparation for each meeting, I'm just wondering, are they really worth it just to save 27 grand over 6 months? Because in the grand scheme of things, it's a relatively small amount of money.
Is against that report, you're correct. There are a lot of recommendations for negotiation, and there are a lot of recommendations for people to go away and then come back again to the board, come back to us in a week's time or 2 weeks' time when they've spoken again to the supplier. And I think the board also has the impact of people negotiating before they come to the board, because they're aware that that is a question we'll now ask and challenge people. Have they negotiated the prices down? Challenge them on the scope of what they've done. Is everything within the scope of what they've requested? Mandatory and statutory service delivery, are there some additional requirements that they've added in there? So there is a challenge, but yeah, you're correct. The actual appendix is not a high value of savings shown there.
May I come back? Okay, well, I mean, you've said that the process itself adds a level of rigour for people coming to the committee and sort of sharpens them up a bit, which of course feeds into Mandy's point about training for contract managers anyway. Are the contract managers the people who do the procurement and set up the contract specification, or are they just the ones who see it through?
No, we're a commissioning-led organisation, so very often at the front end there's a commissioner who will work with the existing contract manager to pick up lessons learned from the existing contract. Then the commissioner will look broadly at what the need is, determine that, and then start the procurement process rolling. And then once the procurement is finished and we've got a new contractor, then there's a transition across to the contract manager to manage the contract. So it tends to be commissioning at the front end, contract managers at point of contract award, and hopefully the contract manager also talking to the commissioner to feedback what they've learned during the cycle of the contract.
Who goes to the programme board? Is it the commissioner or the contract manager?
Commissioners and contract managers and sometimes service managers, yes, a mix. So, and those roles, actually, sometimes you've got a commissioner who is also a contract manager. So sometimes those roles have changed, but it's quite a fluid who actually manages the contract.
I mean, perhaps this is a question for Jason. I mean, bearing in mind that the relatively small figures here, I mean, as 151 officer, this was one of the key components of the managing the financial crisis. Do you think it has had a sufficient impact on the organisation to justify its continuation?
So the short answer is yes, but remember this is one of 3 boards. So this isn't the spend control board. This is around the procurement side of things. You've also got the staffing establishment. I think what's behind your question is, does the cost of running the board justify the savings you take out? Some of this is about changing the organisation's behaviour, and I would say we're not there yet. By the fact there's a board, some of the perhaps poor behaviours we've seen in the past have stopped and people have got themselves already into order. So I know certainly on the spend control board, some requests haven't come forward because people have gone, I won't get this through. So when you look at the measure of savings, you go, that's actually a bit lower than what you thought, but you've actually stopped stuff. I think you still need to keep looking at it, and it keeps going, have we got the format right? Is it too onerous or not? But I would say at the moment, it's still worth doing. When we look at the outturn, if you strip out adults and children's and look at the rest of the organisation, from about month 3 onwards, when we started putting the pressure on, the drop off in spend is quite dramatic. And I think, yeah, he's in the room, Alan's in the room. I know I was speaking to him earlier when we were looking at the treasury cash flows, the actual creditor runs, the numbers dropping quite significantly compared to this time last year. So it is having an impact. I think the trouble is when you see numbers like this, you go, is it worth it?
Well, I did use the word. I used the word impact. Yeah.
Yeah, I think it needs constantly reviewing on, I'd say, a regular basis to say, have we got the format right, or is it stop that now because it's not? And you might need to do a different intervention to change new behaviours that have emerged.
Right, I've got a very patient Lindy online. Sorry, Lindy, to have kept you waiting so long.
Thank you. I almost forgot what I wanted to ask. On page 254, my question is around the supplier resilience checklist. So it says that the checklist will give the minimum level of engagement and the information that needs to be obtained on an annual basis. But will this supplier resilience checklist ensure that there are visits from the management to the supplier? Will it ensure that the supplier is actually really performing? And will it ensure that should the supplier not be able to fulfill the contract, that something is in place? And then the second part is to this credit safe, where the council is being informed if there's any changes in a supplier's financial status, that will indicate whether they can fulfill the contract or not. But that's just one part of ensuring that there is a contingency plan in place. It's so what if you inform the contract manager that there is a problem with the supplier? Because my issue is that at 33% there's no contingency plan in place. There could be other reasons why the supplier might not be able to fulfill the contract. So basically, my question is, will the actions that's been listed on the right-hand side be effective to address what the survey has found? Thank you.
Did you get that, Gary?
Yeah, I think it's about, ensuring people deliver the contract obligations that they've got within their contracts. I think if the contract training is rolled out now that we've identified who our contract managers are, all the contract managers will be aware when a contract starts, you need to actually run through the contract obligations with the supplier, then track them through. And if they're not being delivered, take some action to ensure that they are delivered, as well as managing change through the contract. So that should address those issues. And I think the increased engagement with the services that we're having at the moment as well is also helping people beginning to, the higher, I suppose, engagement with the services, bringing more questions into the team. So that's also helping address things. In terms of credit safe, the credit safe system is it's a live system. So we have all of our suppliers are loaded into the system, and we get credit reports come in when there's a change, say, to directors or the credit rating of the organisation. So that is reviewed daily. And then that information, once it's received, if there's a negative report arrives, goes across to finance for more scrutiny, and also goes to the service managers just to advise them, the contract managers, so they know that an alert has been raised against the supplier. So it's a good system in that we're not relying on annual reviews of suppliers. This is happening daily. We get reports come through, and then they're fed out to the contract managers.
Okay, thank you. So in terms of the recommendations, this report is just for noting. So are members happy to note this and move on? Yeah, perfect. Right, thank you, Gary, for coming along today, and we look forward to hearing from you again in future. Right, so we're going to move on to item 14, which is the age debt 2023 for outturn position, and over to Ben. Now, we've got about 3 substantive matters still left on the agenda, and we've got around about half an hour. So I just ask members to try and keep their contributions focused if possible. Thanks.
Thanks, Chair. So I'd introduced myself as the head of corporate earlier, corporate finance, and that was around the statements. What I also cover in my area is exchequer, which sundry debt falls into, but also systems, which is why this paper is relevant. So I'll keep it brief in terms of then I'm actually really pleased to be able to bring something to the committee on reporting a year-end position for debt and debt recovery. And I think those complexities bringing together the unitary, the onboarding of all of the legacy debts, and the new finance system as well. When one of those graphs, you can see where the sundry debt goes up to just over 50 million, and actually a lot of reporting and progress has been made since January onwards. So I think quite a significant recovery position from mid Q3 of the year to the end. And just to give this area some of that heightened attention, we should be looking at our income and our collection of income as well as controlling spend. Ultimately, if we don't collect our income, then our budget's impacted by writing off. So just to make that statement, and then the key highlight in producing these reports, it's clear that the sundry and the revenues are very separated and the disparity within them, and also even within each of those themes, the multiple systems, processes and approaches as well that we're still managing as per legacies. And you'll note I've tried to put together an action plan just to try and show you what's next, and a lot of that is around systems and process and people. So although I'm pleased with the position that we're at the moment, there's a significant amount of work going to happen over the next, but with the revenue side, 18 months to 2 years as well, in terms of getting us to a single unitary position. I'll stop there then and just welcome any comments, committee chair.
Yeah, thanks, Ben. So opening up to members, so we've got Mandy.
I'll wrap them all off, Chair. That's all right, and hopefully Ben will keep track. Okay. I was slightly disappointed to read that there's no staffing consolidation planned for now, i.e. bringing the teams together, and that the debt recovery is performed at 96.68. So, sorry, collection we're at 96.68. So it would be nice to have a comparison across the teams to see whether some teams are performing better than others. And I think if there's best practice when we're bringing the teams together, it'd be nice to have some learning from that. And do we still get extra money back into our finances if collection rates are above a level? We used to have that. Don't know if it's still in place. And if so, are we above that level or below the level? And my last question is, enforcement agents are only successful in 40% of cases. And in one team, they've got dedicated officers to deal with recovery. And I'm just wondering why, if that is good practice and that's working, why that model hasn't been rolled out to all the districts until they all come in together. Thank you.
Jason's looking at me, I'm looking at you, Jason. So those questions actually all related to revenues, which is probably more yours. Just the housing benefit bit is still a thing, though. We're going to pick up on that in terms of 100% plus the.
Yeah, so just on the council tax and business rate collections, yeah, it's a good point. We can compare between the teams. Just to give you, I was just looking at the national figures actually. They'll be published shortly for 23-24, but for the prior year, so council tax nationally was at 96%. So actually in the first year, unitary to be 96.868, pretty good. Business rates was 96.8%, slightly down by a lot. So yeah, we will pick up those comparisons with the teams, etc. as well. And the best practice, I think, that's one of the key things. We are operating as 4 very different ways of operating. We need to take the best of each of them and bring that together into the new team, as it were, when we got onto one system and way of operating. And you're absolutely right on the housing benefit overpayments. You're right, you can make a bonus if you're very efficient at collecting those debts. You can still keep that.
Thank you.
Sorry, Chair, that's that one about they've got one team that's using officers to collect that's working well. I'm just wondering why we haven't rolled it out everywhere.
Yeah, I think that's part of aligning our processes across the piece now. Like I say, they do operate very differently as different areas at the moment. They are on different finance systems, different collection systems. Indeed, that's one of the projects Ben's got of streamline how to get money into the council in the first place, having one system. So although it looks, you see a council tax bill with our logo at the top and it all looks joined up, that's a bit of a mirage. What's behind that is still very separate for councils, how they're collecting it. So that project to bring everything together is a very live project that Nicola's leading at the moment over the next sort of 6 to 18 months to bring that all together.
But that's making money, that's all. That's collecting better. So I'm just wondering why we are not doing it now if we need money, that's all.
Right, Simon Cartswell and then Simon Coles.
I would say you could say Simon C, but we still be
It's just
still
as
be a problem.
confusing.
I just want to go on from the fact that you're saying that collections are getting better, especially chasing invoices. But if I know we had a case, Jason, and hopefully that's resolved now. But if there's an agreement, say, with a local parish or town to pay tens of thousands of money per annum to the council, and it's just not being invoiced or collected, can we be confident that we have now got robust systems in place to make sure that money is being chased and collected? Because if a parish or town isn't being chased for money, they're not going to pay it.
I think we would say the systems are there. So if I call it our finance systems work and we can collect the debt, I think the bit we've struggled being a new council, not a surprise, is that intelligence of all the debt you should be collecting in the first place. If it's regular debt, that wasn't a problem. I think with a more ad hoc debt, that might have been in one or two people's knowledge bases. And that's where the real dangers are, that somebody agreed something, they no longer work here or are doing a different role. So picking up those. I think that's why you've seen the improvements made. Would I guarantee we've done everything? No, I'm not putting my name to that because I suspect there'll be something we haven't quite got right across the piece. But I think we are getting better at eliminating all those risks. And I think the monitoring system that Ben's got in place now and been able to do that will further improve it because it starts to throw up the areas where you go, what's going on here? That doesn't look right.
Sorry, Jason, just following up on that. And so as Jason said, whatever's in the system, we are now actively debt chasing. All of the recovery action from the system is all on. And we've now got in the sundry side our active legal debt recovery team now chasing those debts and following up. One of the bits though that I've asked them to do in the next, well, from April onwards, so we're already in it, is how do we engage and promote that across the organisation. So that's that reference to ICOP, that income code of practice, but I also want to look at that higher level, which covers both revenues and sundry debt. What is our income collection policy? How do people act when they're recovering debt? What should they be doing in their roles? And developing some e-learning that we've got, but it needs to look right for a unitary piece. So that's part of what's on the action plan coming over the next few months, and that should then raise the awareness. You're right there, I'll probably pick up on that point along the way of and make sure the system knows the debt that we should have, because otherwise how are we supposed to monitor it and report it?
Thanks, Ben. Simon Coles?
Thank you, Chair. It's just on page 259, the last reference, the housing benefit overpayment, 2.8 million total debt, excluding some invoices for 2 districts. Do we have a quantum of the missing 2 districts, and should we be worried about it?
It's a piece of work underway now. So this is reflecting the fact that some do it through our finance systems, some do it through their revenue systems. There's a BI report that's you'll start hearing me say BI report a lot, I imagine, over the next few months. They're joining the data now. It just wasn't ready for time for this, so I can always bring that back or send something round when that report's available.
How concerned should we be?
Not being indicated any concerns in terms of the values and the volumes that are coming through. The 2.8 seems really fairly representative across the piece. The bit on housing benefits, though, referencing back to Mandy's point, is around how actively did all the legacies chase and recover it, because actually we need to be able to maximise that. And if we're going, we just accept the debt. Actually, we want to be able to go beyond that, which is more than 100% actually, if we really do.
Okay, everyone happy? So thank you, Ben, for presenting the plan. Sounds like we're all relatively content with the plan that you've set out. Just keep us updated periodically on progress. Thank you. So moving on to item 15, which is the revised Treasury Management Strategy Statement for 24/5. I've seen Anton's face online. I can't see him in the room.
No, I'm online.
Yeah. I've got Alan in the room, but we can't see you here in the room, Anton. The screen.
Can you hear me?
Yes, we can hear you.
That's okay then. Are you ready for me to crack on?
Yes, go ahead.
So members will be aware of the Gravity project in outline, and there is a separate paper that will go through executive and full council on the budget implications, etc. of that. One of the knock-on effects, should that work be agreed by council, is that the prudential indicators in the original Treasury Management Strategy approved by full council in February were perhaps not sufficient to deal with the additional debt that Gravity will or could create. And therefore, we are bringing back a revised Treasury strategy to simply update those prudential indicators to provide sufficient headroom that we'll be able to stay within them. So the particular prudential indicators in question are referred to as the operational boundary and the authorised limit. This is where, under the SITFA codes, members agree limits to the amount of borrowing that officers are allowed to do. And therefore it is an upper limit that we hopefully will stay well within, but it's an upper limit that we need to operate within. And so we've revised these for the budgeted impacts of Gravity, assuming it's signed off, and bringing it back to you for consideration today, and then ultimately it will go to full council, because prudential indicators under the codes should be approved by full council.
Thanks, Anton. So it's relatively straightforward from that perspective, in that we are allowing you to effectively have a larger spending limit on the credit card. I suppose the question, which probably isn't a question for you, so I'm going to ask it of Jason, is are how far along are we in signing deals, etc., or deals being signed for the gravity site? Does it pose us any risk if there's a change of government? Are we effectively going to incur the borrowing and then potentially face the risk that the deal falls apart and we're left holding the can?
Good question. I wish they hadn't called a general election when they did, because we were very close to finalising everything. That's obviously put a spanner in the works of getting final agreements, although we are still working with civil servants and had quite a few exchanges yesterday with them around getting final wording on stuff. We will not put the council in a position, we've been really clear on this, where the council funds the costs of this debt. That is why the government is willing to give us the grant. So the two go together. In terms of this paper, it's kind of a technical paper on the consequences of agreeing the gravity deal. If you agree the gravity deal, you need to do this, otherwise we break our own rules, which seems a bit stupid. But the control would be in terms of agreeing that and making sure that we have got this lined up, as you say, and don't expose the council to a borrowing risk they can't fund.
And I'm assuming if anything were to happen and it doesn't go ahead, then Anton wouldn't borrow the money.
Indeed.
Perfect. Right.
Unless I suppose there is a set of circumstances where the 151 asked me to borrow for other purposes, but we'll assume that would go through, if it was of sufficient size, would go through proper scrutiny and sign off anyway.
Okay, thanks, Anton. Mandy?
Super quick comment. This paper went through scrutiny yesterday. So just a plea really, section 19 scrutiny comments. If it's moving on, please don't forget that it's been to scrutiny. You need to pop their comments in there. And secondly, for anybody that wants it, there was a really good paper on gravity yesterday that went to resources. So if anybody wants to get the up-to-date position, I found that really helpful. Thank you, Chair.
Right, so let's move this to a vote. So is everyone happy to accept the revised paper? All those in favour? Any abstentions? No. Got your authorisation. Thanks, Anton.
Thank you very much. I shall await the movement through exec and full council.
Thank you. So moving on to our last substantive item for today, which is the Treasury Management Annual Report for 23/4, and over to Alan.
Thank you, Chair. This is the year-end report as required by the Local Government Act 2003. That reports on Treasury activity for 23/24 and the debt and investment positions as at 31st of March 2024. Importantly, this report gives assurance that Treasury activities undertaken have been in full compliance with relevant legislation, codes, strategies, policies and practices. To give some external context, the UK bank rate has been raised 3 times during a period, 4.25 to 5.25% in August 2023. And at that point, it looked like rates had plateaued, with expectations that rates would fall in early 2024. As inflation figures have remained above the Bank of England targets, expectations of rate reductions have been pushed back. As a result, investment and borrowing rates have remained elevated with a fair amount of volatility. Tables showing movements in the key rates are shown in Appendix B. Investment activity during the year, there were 210 cash deposits totaling nearly £1.4 billion, mostly with money market funds to maintain sufficient liquidity and to allow to repay maturing debt as it fell due. Average balances stood at investment balances stood at 192 million on the 31st of March, which included 28 million of cash held for external bodies. Legacy portfolios and investment balance information at the beginning and end of the period can be seen in tables 5 to 8, points 70 to 75. Cash balances are over 103 million lower at the year end, the majority being used to return cash held on behalf of NHS Somerset. Income, net of that apportioned to external bodies, of over £11 million has been earned in the year. The borrowing activity, the inherited borrowing position of Somerset Council is laid out in table 1.37. It shows that £53 million was lending borrowing between legacy councils, 48 million of which was lent by Somerset County Council. This was effectively quashed on the 1st of April. There was also 206.5 million of borrowing of a temporary nature from other local authorities, most of it maturing during the financial year. Tables 2 and 3, points 38 to 40, show the movement in borrowings and the rates paid during the year. During the period, an aggregate of 110 million of temporary loans has been repaid, and also 15 million pounds of LOBOs were repaid, as the lenders exercised their option to raise the rate of the loans, so we exercised our option to repay them. New borrowing taken at higher rates has pushed up the overall interest rate for borrowing from 3.45 at the beginning of the period to 4.26 at the end, but this was inevitable given the rise in interest rates over the last year, although the cost of debt did underspend on the budgeted cost.
Perfect. Thank you, Alan. So over to members for questions. Andy?
Because of time, this has got 2 more meetings to run through and I can save questions for them. Thank you.
Okay. Simon Carswell?
Just a quick comment. There's 2 graphs on pages 328 and 329, and they've got a percentage on one axis, but they've got no timeline on the other one. So I don't know what the bottom line is. What is that? Years, months, something else? Doesn't say. 328, 329. The return on total investments, internal and external funds.
Sorry, I don't have the full report with me. That's a graph.
Alan, do you want me to come in? Because I know which one it is.
Okay, thank you.
So, Councillor, those are graphs which show the axis is different individual councils. And obviously, we've indicated which is Somerset Council, but we neither have nor would feel it appropriate to disclose who the other councils on that list, on that sort of width are. So there isn't really an axis to report on. Does that make sense?
Yes, thank you.
Okay. Any other questions from members? If not, are members happy to note the report and recommend it to executive, then to full council? Perfect. Thank you, Alan. Thank you, Anton. Right, moving on to item 17, which is the Audit Committee work plan. So are members happy with the plan as set out? Jason?
I was just going to say, one of the things, me and Michelle just been messaging each other. One of the things we do is set out the plan across the whole year so you can see the pattern of what comes where. I think that's quite helpful. Then you can see, yeah, when debt's coming or update and swap, etc., etc.
Sure. So we may, I'll talk it through with officers, but I'm concerned that the June meeting may be a bit superfluous if the South Somerset audit isn't ready to come. So chances are we may end up cancelling the June meeting. Have members got strong feelings about that either way at this moment? Yeah. Okay, we'll talk it through with officers and make a decision and come out. If anyone's got any strong feelings in either direction, please can you message me? Okay. Mandy, you had a question?
I think my only feeling would be if you're loading too much onto the next agenda, that would be my only comment. So just a couple of things. Have we got procurement waivers reported? I think page 85 of the report said that we'd have procurement waivers reported in the work plan. And then we had the update on auditors' key recommendations. I think that was going to go into the work plan as well for, when did we say? September, was it? Can't remember.
Not sure off the top of my head. We'll review the forward plan for the next 3 meetings just to see if we can get the balance of reports into a better shape, so that we haven't got quite as much workload. So we either meet more frequently and try and split the workload out so we have shorter meetings, which I suspect might be preferable to members, or we stick with a fairly hefty agenda, and when we're here, we're here. I don't know what approach you would prefer.
I think we've got all the accounts, all the numbers of accounts out of the way, but I do think there are some emerging issues, certainly around risk. I think we all need to look at the programme risks for all the work that's going on with the council, as well as our normal risks, and probably gravity risks as well. That's another separate risk register. And I think the sort of debt and recovery figures, again, great report to see, but I think we're going to need to programme that into our works programme. So I think there will be, whilst we won't have as many counts, I think there will be 1 or 2 items that we're going to be seeing reported on to replace them almost.
So as we move from the previous phase, which was very much about clearing off those old accounts, now we're moving on into a different rate and rhythm with trying to get ahead, looking at the future risks and trying to help the organisation manage its overall balancing act of different balls in the air at any given moment. So I think there's still plenty for us to do this year. The Somerset Council first audit is going to be an absolute pig, if I'm honest. It's going to be really complex. We've got a new finance system. There's massive amounts of environments between different budgets and all that sort of stuff. It's going to be hugely complex. So the timetable the auditors have set out today, I think, is ambitious, maybe even courageous, but there we go. Jason.
Just on the work sort of plan going forward, we'll try and balance it across the month so it kind of fits better. One of the things that, and I'll have a think about it because I don't know quite what it looks like yet, but one of the concerns I have is that part of the capitalisation direction requirement is that you have a sit for review. That is very much focused on the finances, but it is a bit wider when you look at the reviews. They are governance stuff. Now, I think having you done the annual report today, you can see, actually, I think virtually everything I think is covered off, but I will double check no things that this committee should have done that it hasn't done because we've been so busy doing the accounts that would cause you supplements at the other end. So I'll have a look at that, and if there are any gaps, then we'll make sure they're on your agenda as well.
Okay. Look, thank you all for your hard work again today. I hope you have the nice rest of the day. The sun is still shining at the moment. There is also still cake left if you want to take some home with you. Thank you all.